May I request Madam Hemavati Ramachandran also to be on the dais. A very warm good morning to one and all. Before we start the session, I may request the members sitting on the last few rows to please come and occupy the elite round table chairs. Actually, it was installed yesterday only, so you are the most committed members to inaugurate the new furniture. Please, you can come in front. At the outset, on behalf of Southern India Regional Council and on behalf of Indirect Taxes Committee of SAS of ICI, I extend a warm welcome, special welcome to our Principal Chief Commissioner of GST Tamil Nadu and Pondicherry, Shri C.P. Rao IRS. Friends, kindly join your hands welcoming Shri C.P. Rao. Before we formally go to the program, may I request each and every one of you to kindly raise for ICAI motto. Before we hear from the Principal Chief Commissioner, let me give a backdrop for this advanced course on GST. First of all, I must thank each and every one of you and also the others who will be joining us quite soon for enrolling for the first batch of advanced course on goods and service tax. This is a program which is designed by the Indirect Tax Committee of ICI, and they have made it a point that because it's almost the second year, we are going to step in. It's 11 months is over, we are in the 12th month now, 12th month of GST. So almost a year is going to be over, and the basics are enough. We have seen enough of basics. And that's why the objective of this course itself has been designed that the sections and the preliminaries won't be much focused, and the probable and the most sought after focused participants of this course will be those who have already done the certificate course on GST or those who have already gone through the basics of GST. They will be the ideal professionals for this particular course. This course is actually designed for a 6-day program, and out of this 6-day program, 4 days will be a live program where we'll have a seminar type session, and the structure is also designed after a lot of thought process by the committee, and eminent list of faculties are also being impaneled. And the structure which is before you, it's from the advanced course what has been designed, and only myself and my course co-coordinator for this particular program, I must definitely make a point here, Sri C.A. V.V. Sampath Kumar. Friends, join your hands for Mr. Sampath Kumar. But for him and but for his experience and expertise, and I'm sure I would not be enabled this much to make this program, make the program design, and also bring the eminent faculties. Actually, it's like match the following. For the right topic, choosing the right faculty, and also getting their availability and time, because this we have planned almost a month back. Almost 30-40 days back itself we have planned. We have sat through minimum, sir, I think 3 to 4 rounds of time we have sat, because getting the faculty's timing was very, very difficult, and we were successful in getting that time. Since 40 days before itself we were able to contact them. Now, coming to today's, this 4-day program. I said it's a 6-day program, but 4 days will be a seminar type. The remaining 2 days will be a webinar. And those who are participants, this information will be shared to the indirect tax committee. And whenever there is a webinar on the other areas, and we will be sharing you the entire course structure. So I request the office to share with you that entire 6-day course structure. Entire 6-day course structure is there. I'll ask them to share that with you. The first 4-day course structure is what we will be having, the 24-hour CP program. So today, tomorrow, June 1, June 2nd, and June 8th and June 9th. The remaining 2-day webinar will be informed to you on the another advanced topics, and mostly all these are legal related on the aspects of show cause notices. Even though we have one session on show cause notices, this is the maybe the first year where we will come across show cause notices for the past 9 months for the 17-18. And coming to the 4-day program, we have, I must make a mention here, and I'll also request Mr. Sampath Kumar also to share his views also and his experience also. Myself and Mr. Sampath Kumar, we were the course directors for the certificate course on indirect taxes way back. We are in 2018, exactly 5 years back. So there was a certificate course on indirect taxes where almost 72 participants. I repeat again, 72 members. And for your information, we have just now, while we are entering along with Mr. Rao, we have crossed 72 registrations for this program also. Well, and maybe the numbers will be still counting, and generally, the moment you say it's a full day program, our members have to get themselves ready with, and they have to negotiate with the traffic and come. So by 10 o'clock, I am sure the hall will be full. What we did in that certificate course, we ensured that the entire batch was cohesive, and they shared their knowledge and insights. And I am sure we have a very highly learned audience here from various parts of Tamil Nadu and even outside Tamil Nadu also. We have one member from Thrissur and a member from Trivandrum. So we have a member from Coimbatore, okay, so Tirupur. So very many members are here. So I believe this knowledge transformation, I am sure, will definitely take a long way. One member, we have a very long friend from Madurai, he is also here, the past chairman of Madurai branch. So thank you very much. And what we used to do is, we give the platform, this podium is for the speakers and also for you. Every day we request you to not to sit in the same place, because there will be 4 breaks, there will be 4 sessions. So morning one session, after the tea break one session. So I request you to once after the break when you come back, please don't sit in the same place. You try to relocate yourself to another table or to another seat, because left and right to you, 2 other friends will be there, and try to get acquainted to them. This is number 1. Number 2, the introduction of the speakers. One among you will be doing the introduction of the speakers, and today's speaker is Mr. T.R. Srinivasan, CA T.R. Srinivasan. Thank you very much. A very, very I must say, a multifaceted and most versatile person, and especially on indirect taxes, he has an in-depth grip on this particular subject. Thank you, Mr. Srinivasan, for accepting our invitation. And he is one of the co-opted faculty in that advanced course, the empaneled faculty. This is number one. Number two, every session will be for 1.5 hours. At the end of 1.5 hours, we will be requesting the faculties to give a gap of 5 minutes. So I will request the participants. One among the participants we will select, being the course coordinators, myself and Sampath Kumar. We will intimate you in advance. Once that 1.5 hour session is over and about to be, we are going to give a break. That particular member will come here and give a sum up of what has happened in this 1.5 hours. I repeat, the member will come here on the stage and will give a sum up of that 1.5 hours. And in that process, that member also get introduced to this August gathering. So there won't be a repeat audience for your information. So most probably we have 4 into 4, 16 sessions, and maybe in between we may even ask more than one person also to give an introduction, either self-introduction or on the subject introduction also. So in that process, we may try to cover almost everybody to get yourself introduced to this August gathering. And not only me, along with Mr. Sampath Kumar, and we also believe that you also will agree that knowing each other is the first fundamental step in sharing of knowledge. If I have a rupee, you have a rupee, we exchange our rupee, we end up with 1 rupee. But if I have an idea, you have an idea, we share our idea, we end up with 2 ideas. And just imagine if it is 72 ideas, it will be phenomenal. So before we get to hear Mr. Rao, may I request Mr. V.V. Sampath Kumar to share his views and thoughts on this particular program. And I will also request CA Hemavati Ramachandran to do the introduction of our Principal Chief Commissioner. So first over to CA V.V. Sampath Kumar. May I request Senior Member CA J. Purushothaman sir to walk by the first one, please.
Thank you, Mr. Raju. Principal Chief Commissioner, Mr. Rao, Regional Council members, Mr. Raju and Hemavati, my dear brothers and sisters. It's a great feeling for me because 6 years back, it's not 5 Raju, 6 years. 6 years back, 72 members. Even today, they are bonded members with respect to sharing clarification in a WhatsApp group. WhatsApp once has been used very effectively. Any doubt, any help, any meeting, anything happening in their family, the 72 is a bonded group. I wish this should also be a group to share knowledge, take this forward, and not to take more time of yours. The course rightly mentioned by Mr. Raju has been devised by the IDT of Delhi. But finding the faculty, anybody can be a speaker with the knowledge, but we have tried to do our best in identifying the good speakers for the respective topics, and the support of Raju cannot be explained in words, because every time, if it is 3 o'clock, he will come by 2:50. Not 1 hour, 2 hours, 2 hours, 3 hours deliberated. The course content has been given, speakers have been selected by us. Wish you all the very best to you. Thank you very much.
Good morning, members. I am honored to introduce C.P. Rao, IRS, the Principal Chief Commissioner, Goods and Service Tax and Central Excise, Tamil Nadu and Puducherry. Sri C.P. Rao, a 1983 batch IRS officer, was born in Orissa in 1959. He holds master degree in political science from Delhi University. Before joining the Indian Revenue Service, he worked for the SAIL during 1980 to 83. During his career in IRS, he has worked in various capacities in Customs, Central Excise and Service Tax departments at Kolkata, Mumbai and Chennai. He was Commissioner of Appeals at Hyderabad Commissioner of Central Excise and Service Tax at Salem and Guntur during 2004 and to 2014. He has joined the Service Tax Commissionerate at Chennai in September 2015 as Principal Commissioner. He also held the charge of Principal Chief Commissioner of Central Excise Chennai Zone. At present, he is the Principal Chief Commissioner of Goods and Service Tax and Central Excise. TCP Rao has specialized in anti-evasion and anti-smuggling work and was instrumental in unearthing hundreds of crores of rupees of tax evasion. An able administrator and a team player, Shri C.P. Rao had shown key interest in taxpayers' services, staff welfare measures, and always committed to the organizational objectives. He has participated in several training programs organized in India and abroad, including IIM Ahmedabad, ISB Hyderabad, and also at Syracuse University for Public Affairs and Administrative Policy, USA. He is a voracious reader and a golfer, and while he traveled in India and abroad, he has received many rewards and awards for the meritorious service rendered to the department. With this small introduction, I am honoured to invite Chief Commissioner.
Before we hear Mr. Rao, may we do the pleasantries. May I request the past chairman of Madurai branch, CAG Parthiban, on the stage to welcome our Principal Chief Commissioner with a shawl on behalf of Southern India Regional Council. May I request CAG Purushothaman and our esteemed faculty members, Mr. Srinivasan and R. Subramanian, also to join the dais.
A very good morning to all the learned chartered accountants for participants in this course. It's been a pleasure and an honor to be here. Mr. Gopal Raju and Sabat Kumar had come a couple of days ago to ask for my time, and I gladly accepted it because not only as a personal I myself feel very personally committed to interacting and communicating with my clients, that is my SSCs, as well as those who act as a bridge between us and the SSCs, namely the chartered accountants and other professionals who actually perhaps simplify the complex law and the complex procedures for the common tax paying public. 11 months into the GST, it has been a roller coaster ride. We had far too many ups and downs in many issues. The task of integrating all the indirect taxes into one under the single law is one challenging task, one hell of a challenging task. What is much more important and which normally misses the general eye is that both the center and the states have, in a manner of speaking, surrendered their respective autonomy in taking decisions, in formulating policy relating to the indirect taxation, and pulled it together as a single body by way of a GST Council. As you know, the GST Council has met several times, and amazingly, at every time, the decisions are always unanimous. Regardless of the fact that the ministers who are the heads of the executive of various states may belong to different parties, may come from completely different background, and each state has its own specific challenges. But despite all that, all the finance ministers and their supporting staff contribute to the discussions, and they actually arrive at a consensus. This is a major achievement of this functioning democracy. This is something very important. All of us, especially as professionals, we should know about this. The fact is this, that there is the current indirect taxation law in the GST is also has taken features both from the earlier central excise service tax laws as well as certain features of the local tax laws. The most complex thing has been for the states to adopt the classification harmonized classification system, which we have evolved in tariff and a customs tariff. So it has been adopted and brought into the classification, has been brought into the law, not by way of legislation but by way of notification. So for the purpose of understanding classification, you need to go back to the Customs Tariff Act and the Central Excise Tariff Act, which is modeled on the Customs Tariff Act. Some aspects have been brought in. Services never had a classification earlier. Services have been specifically classified. So this is how we started with the legislation. As far as the mechanisms are concerned, we have started with the adoption of the Customs Tariff Act, and the valuation aspect is more or less common to what was there earlier in the Central Excise. I am sure all of you who have dealt with the Central Excise in the past, I am sure that you feel familiar about it also. So, but there have been two major challenges. One major challenge is to deal with the public who have now in the Central Excise, where the threshold was 1.5 crores. In the service tax as well as in most of the VAT regimes, the threshold was about 10 lakhs, but we have fixed it at 20 lakhs. What it means is that all the manufacturers who are between the 20 lakhs to 1.5 crores have come into the fold. There has been a challenge about distribution. So the modalities have been worked after arduous negotiations, and they have been done. You will be glad to know, I am sure all of you know, that the SSC base in Tamil Nadu has been distributed in the end of February. I have signed it, as well as the then Commissioner of VAT and Regional Chief Secretary Mr. Chandan Mauli, he has signed it. So SSC distribution is over. So as chartered accountants, one of the first tasks is to know to which regime your client belongs to. Automatically that will decide to which authorities you need to deal with. The entire GST regime has been built to make it online. Everything can be online. You can file your return online. You obviously pay your taxes online. You also seek clarifications from us in the cyberspace, by Twitter, by many other methods which are available to you. So it is basically designed to minimize interaction, to make everything very transparent. So this is, but I don't know how good or bad it is. We have had teething troubles. So I'll just particularly mention two teething troubles. The number one we had is relating to refunds of taxes paid in relating to exports. Huge issue, because unlike in the Central Excise regime, where most of the manufacturers were procuring the raw material duty free. In the GST regime, they are expected to procure it after payment of tax, take credit and use it for the purpose of paying the taxes and export. And if there is for the value accretion, they can take other things like drawback or something like that. This bringing into the credit network those exporters who are between the 20 lakhs and 1.5 crores. This was something which was major. The other aspect, of course, was that the systems unfortunately got too overloaded. And this is one big challenge we have faced. In fact, we are still facing. As you know, we have conducted one refund fortnight relating to this in the last 15 days of the March, and I am proud to say that as far as the refunds under my control are concerned, 80% of the refunds have been paid, and acknowledgement has been given in 99% of the cases. So the refunds have been paid in 80% of the cases. So I don't know what is the satisfaction level. I think you must do some kind of a survey relating to that. But there is, but we are doing one more, starting from yesterday. So I would request all of you to communicate this to your clients, and if anyone has any pending refund claims, I would request all of you to take this opportunity and bring it to our notice wherever there are problems. I would be happy to be of assistance. We have Seva Kendras. You are free to speak to them. You are free to speak to any of the officers, and you can talk to us, or you can interact with us, you can raise a query either on a Twitter handle which the Single Board of Indirect Taxes and Customs has, or you in our own the Chennai Central Excise earlier same works. So the same address you can tell us, and we will be happy to answer all of you. The second challenge we had faced was relating to the filing of the returns. So as you know, all of you know, originally the filing of the returns was supposed to be everything is online. So you file your own output, and then as far as the credit is concerned, the output of your supplier and vendor will be taken into consideration, and straight away your credit would be computed, and your SSC, your liability would accordingly be adjusted with the credit, and rest of it you are expected to pay in cash. And so, but unfortunately, what has happened is just that the capacities were we didn't expect perhaps. So the capacities were huge capacities were required to be built, and unfortunately, it was not built. More than 1 crore SSCs the new registrants have been added to the GST. Therefore, this is not something which was expected compared to the kind of SSC base we had. So, for instance, in the Central Excise and Service Tax regime, for the entire Tamil Nadu, the tax paying base did not exceed 1 lakh. So, you can imagine the kind of today in the central pool itself, I am handling more than 10 lakhs SSCs. So, you can imagine the challenge. But of course, a large number of them are below the 1.5 crores, and therefore small and medium enterprises. But I will have to deal with all of them. All of them are filing returns. So yes, that's one thing, and for which I would again request your assistance and cooperation. Nearly 30% of my SSCs are not filing returns. I mean, this is something which I know that the deadlines have been extended over a period of time and things like that. But as of today, so for the months of July and August, the filing is almost around 80 to 85%. But overall, if I take the number of returns that are required to be filed and that have not been filed, it's about 30%. So I'm sure that all of you are filing. 3B of course is much better, but those who are filing 3B returns, they are also expected to file GSTR1. I hope you are aware of that, and I would request all of you and to assist the tax-paying public in filing these returns. So once the returns are filed, then alone we know that a self-assessment has been done, a certain amount of payment has been done, and things like that. So I would request all of you and your cooperation in this. The third thing I wanted to advert to you is relating to the e-way bill. As you know, in fact, I have been having, before coming here, we were having a small discussion, and I understand that they have, Mr. Raju and Mr. Sampath said that they have got a topic included relating to e-way bill. Though the e-way bill is for the interstate clearances is going on, but for the intrastate, as you know, it's being implemented from 2nd of June onwards. So the notification from the state government has been issued, and I do not really anticipate many problems, but because the interstate movement has been fairly smooth, both the generation of the e-way bill and there is really no great hiccups we have noticed. So I hope interstate movement would also be similar, but I don't know, because interstate you deal with much smaller dealers, much smaller SSEs, and therefore there may be too many doubts, and you should perform a role in clarifying these doubts. So, well, before concluding, I would like to congratulate the committee in putting together a very comprehensive course. Something of interest to me is that they have also put in the course material certain reference to Customs Act. So, if you recall, I mentioned to you about the teething difficulties we have faced regarding the IGST refunds. So, I am sure that that's because of that they would have perhaps put it that. And there are issues relating to the statutory reconciliation and things like that. Of course, the part of your normal working. Yes. So advance ruling, we have started advance ruling. In fact, the Tamil Nadu advance ruling authorities have passed certain orders in the recent past. So appellate authorities have been constituted. So I think that when you start seeing litigation or complaints, for the complaints management also, this advance ruling becomes a very important thing. So all of you, I see that that's important topic, and that's been included. And Ms. Vaidisran is interesting in the last. So he is dealing probably with the constitutional and legal issues which are coming about from the GST. So I think that you have a long session, and I'm sure that it will be as fulfilling as it had been for the previous sessions. And I congratulate all of you in joining this course, and we hope that you have a 4 days of complete intense sessions. So it's been thoughtfully kept in the weekends so that your professional commitments are not interfered with. So I see all this. So it's been done with a certain amount of care and diligence. So I'm sure you'll make the best of it. Thank you. Thank you very much.
So that was so nice of you, and we have also made a request that a series of GST programs have been lined up, and tomorrow it's actually hot from oven. Yesterday, 31st May only, we have got a notification, a press release as well as Tamil Nadu TNGST notification with respect to applicability of e-way bill for intrastate in Tamil Nadu. So we have requested two eminent faculties to deliberate on the topic, Mr. R. Subramanian, who will be one of the faculty for tomorrow's program, and Mr. V.D. Sampath Kumar. Both of them will be here to take us through the e-wayable from evening 5:30 to 7:30. So after our program, there will be another 2 hour, so an additional CP program will be there. So I request all of you to be well prepared for Saturday's marathon session. Okay, so it will be 7 hours plus 2, 9 hours of GST. Well, now may I request, we have 2 doctors here who are the pillars of SARC. We have Dr. P.T. Giridharan here, who is the head for our Southern Regional Office. May I request Mr. Giridharan also to be on the stage, and Mr. Paramasivan, Dr. T. Paramasivan to be on the stage to honor our Sri C.P. Rao on behalf of each and every one of us present here. So may I request Hemavati Ramachandran and V. Sampath Kumar also to join the pleasantries. May I now request C.A. Rajiv to be on the stage to give his introduction for a minute and introduce C.A. T.R. Srinivasan, who will be our first session speaker. And may I request from Coimbatore, from Gandhipuram, we have a member here, C.A. Rajeshwari. So may I request Madam to do the sum up after, before the tea break, that is by before 11:30. So by 11:25, I request Mr. Srinivasan to give a break, and Mr. Rajeshwari will sum up for the second session. The meeting can start immediately.
Good morning to one and all. First of all, let me thank Rao sir to be present here to inaugurate our function. This is one of this is the first function on advanced GST course, and I also thank the committee members, the coordinating committee members, for arranging this kind of advanced program on GST, because we are all aware that we are all expert and we are going to be expert. And we got a lot of basic sessions. There are a lot of basic sessions on GST which were happened in the institute, and now it is time for us to understand the advanced issues in GST. And we have a lot of eminent speakers from the industry and from our profession. Without taking too much of time, let me introduce the first speaker, Mr. T.R. Srinivasan. He's a good friend of mine and a very down-to-earth person, and then he's a fellow member of the Institute of Chartered Accountants of India. He's been in practice for the last 9 years, and he's a faculty member on indirect taxes for the last 9 years, and he's handling consultancy and litigations in up to tribunal and in various matters like service tax, central excise, and SENVAT, value-added tax, etc., etc. So mainly into indirect tax. And then he is a member of the editorial board for books published for professionals and students. And no need for further introduction. He is a CA rank holder in ICA examinations. And then he is a college first rank and gold medalist in BCom at Vivekananda College, Chennai. And regarding his knowledge sharing, he is a member of the study group for implementation of GST, ICI, and faculty on the subjects of indirect taxation and financial reporting for the past 9 years, and certified trainer of NACEN Government of India for GST, trained more than 2,500 officers of income tax, service tax, central excise department as a visiting faculty at the regional training institutes, the Controller and Audit General of India, and the Institute of Chartered Accountants of India, the Tamil Nadu Electricity Board, etc., etc. Speaker at various trade associations and Chamber of Commerces, and he has trained more than 7,500 finance professionals, students and then government officers as a faculty. And with this small introduction, let me invite Mr. T.R. Srinivasan to handle the first session on our advanced course on GST. Please.
Respected Shri V.V. Sampath Kumar, Chairman Indirect Tax Committee of SARC, respected C.A. Gopal Krishna Raju sir, Regional Council Member SARC, senior members of the profession were off the dais, and also fellow chartered accountants and friends. Very good morning to all. Can we have a good morning again back? So that, thank you so much. Right. So that I will not sleep during the session. Okay. Right. So as the principal commissioner was talking about the classification issues, of course my topic was not on classification, but there are a lot of issues which comes out on classification. 2 days back I also met Purushothaman sir when we are in AAR for some issues on classification again. So very simple words itself have a lot of issues which has created in GST. So right, starting from what I call kesari in my home, in my mother-in-law's home they call it as halwa. Okay, so just a simple way, rava kesari is what I call, and my mother-in-law's house they call rava halwa. So the same product has two different understanding or words being used between two different issues. So classification has become a lot of problem. In fact, we are going through some AAR ruling also. The topic which was given to me was on 3-4 specific aspects. One is on supply, business definition, and taxable person and valuation, on what could be the issues which you are already facing in the last 11 or 12 months, and some AAR rulings have come in the past, 90% of them in favor of the revenue, and also certain things are normally contradicting our general understanding also. Okay, so just to starting with, this is the presentation flow which we have decided upon. This is the provision, so I am not getting into the provision because they specifically told don't refer any section at all. So we have to directly get into the issues. So everybody knows about supply. So I am not getting into that too deeper, but let me directly deal with certain specific issues. One of the hottest topics which had been in discussions last 1 year, along with GST, has also been Bitcoin, or all we call these currencies as cryptocurrencies. Okay, so all these cryptocurrencies, though has not been considered as Indian legal tender. It's not Indian legal tender at the RBI. So the question is, we had some of our clients who is holding a cryptocurrency called Ethereum. So he told after he got everything and he sold that also. So there are some currencies, Bitcoin, so there are a lot of cryptocurrencies revolving around. Though it has not been considered to be Indian legal tender, still everybody is aware that it has been in transaction level. There are a lot of transactions that are now happening. So just to start with, maybe this is a question we also had. So this will be more of a discussion session rather than one-side monologue, so that everybody can contribute to the discussions we had, because there will be a lot of new thoughts which will come out as we discuss upon. So the question that came up was whether if I sell a cryptocurrency, would that attract GST? So that's the first question which came up. Okay, if I sell a cryptocurrency, do you think will attract GST? Let's say Amitabh Bachchan is that's where it started. Amitabh Bachchan sold some few crores of amount on that, and then this became quite popular in India, and so much of talk has been happening around this. Of course, it is now happening. I mean, it's not coming as part of the books of accounts. Maybe some companies yes, but most of the people is kept in the digital log. So the question that came up was, should in case if I receive a consideration, because now some of the software professionals are receiving their consideration in the form of cryptocurrencies, not in the form of even dollars or pounds, but rather in cryptocurrencies. There is this one of our client who is doing work for a Finland foundation. As part of the research work he has done, as a software professional, he has raised a bill, and the consideration has been given to him in the form of this currency, Ethereum. So the question is, first, will this be treated as a export of service? Second, would it be treated, if I sell this cryptocurrency again, should I pay GST for selling a cryptocurrency? What would be your view on this? Would a sale of cryptocurrency, would it attract GST? Will it be considered as a transaction in money? First question, because the definition of goods as well as services both excludes transactions in money. So the question is whether cryptocurrency sale, would it be a transaction in money? So if you go to see the definition of money, it will just say, it talks about Indian legal tender or any other foreign currency, and check, letter of credit, money order, etc. So which means definitely cryptocurrency has not been specifically factored in the definition of money. It only talks about Indian legal tender. Of course, cryptocurrency has not been treated as an Indian legal tender. So if I sell cryptocurrency, assuming I do it on a regular basis, like I buy and sell through a stock market, through the exchanges, would that attract GST? Your answers are solicited. So do you think it will attract GST?
No, in fact, the first question itself is not answered, whether the export
will it be an export?
It's in the convertible foreign currency. It's not a convertible foreign currency at all, because it's not treated as a currency in India.
Yes.
So that itself will exclude it away. And the second question, how do we treat in their books?
So now, the first part is export of services. Of course, it's not satisfied because it is not convertible forex. That's not there. But what they do ultimately is they will not hold this cryptocurrency finally. End of the day, they have to convert that into a dollar or some amount. They have to convert. Some of the cases, what happens, the negotiation happens in the forex, but the ultimate settlement happens in the form of cryptocurrencies. So in this case, he is negotiated in British pounds. But ultimately, when it was settled in the form of cryptocurrency with a condition that you can sell it later at so and so rates, etc. So first situation, of course, it's not considered to be an export in such case. Second, if I sell it on a regular basis, because if it is, again, it has to be in the course or furtherance of business. If that is not satisfied, if you are doing this as a consideration, it's not part of your business, then of course it will not be. Assuming it's part of your business, would that attract GST? And if it is attracting GST, would it be treated as a supply of goods or supply of service? Another issue also will float. So what would be your views on this? That's a question. So
first, if it is not a money, it has to be a commodity, because it is visible.
It is invisible.
No,
So
it is invisible in the sense it's invisible in the form like a share.
yeah. So the next issue which came up was, can it be a security? Again, no, because the definition of security as per the SCRA doesn't include this segment also. Because there's one thing which has now been evolving over a period of time, and now there are many companies having this in a hold. We see a lot of GST implications coming out on these cryptocurrencies also. And of course, the definition of goods is every kind of movable property is what we call goods. And incidentally, it also includes licenses are also treated as part of goods. In fact, recently there was a lot of circulars and clarifications on this license called a PSLC, Prime Sector Lending Certificate. It is there for long in banking industry. the government has woken up, the tax department has woken up to PSLC quite recently. So that license is treated as goods. So this Bitcoin, of course, is not something which is tangible, in the sense that it is a digital currency. So if I sell, definitely in our view it could attract the GST perspective, because of the simple reason that it will be treated as supply, and it is not money, it's not a transaction in money. The only thing is, as goods or service is something which is yet to be clarified. The government has powers to notify, as per section 7 itself, they can notify certain activities to be supply of goods, certain activities to be supply of service. There is one such thing where the clarification is awaited on whether it should be supply of goods or service, but in our view, I think it should attract GST, provided it happens as part of their course of business. This is just a starting point to see that there are a lot of new developments which are happening in business that could affect their GST flow. The supply definition, I am not getting into the definition of supply, this is broadly the definition, so which we are not getting into. We will just directly focus on some of the issues which are coming up, which we have faced, and we believe that going forward this will be there. One is about if I receive a gift or a prize money, let's say a cricketer wins man of the match award, somebody gets a prize money. Would that prize money be treated as a supply, and would it attract GST? What will be your view? Will a prize money attract GST? A cricketer gets man of the match award. Will it attract GST or not?
Will attract. No.
Two answers should be there, then only we can have discussion. If everybody says same answer, then I have to proceed further. So long there are two answers, it's good for discussion. Okay, so somebody said yes.
Will attract.
It will attract. Why do you think so?
This is not money coming from BCCI.
Okay, so we are talking about cricketer, means you have directly gone to IPL.
No.
It's not coming from BCCI.
From board money is not used.
Okay, fine. So somebody said no, it will not attract. Why do you think so? There is no service involved. But prize money is only for the I played well, or I sang well, I answered the question well, hence they are giving. Would that attract GST still? Because, because this was an issue, it was there under service tax also. We have been handling, for one of few cricketers, this issue came up. There was a show cause notice which I issued to these people saying that you should pay service tax on this. However, if you see the definition, it should be, supply definition is there. One condition, it should be for a consideration. The question is whether prize money can be considered as a consideration for providing a supply. The broad answer is there was an education gate which was given earlier, and service tax negative list was introduced. There was an education gate. There they said for a consideration means what? In that they said there has to be a contractual relationship, there has to be an obligation on both the parties to perform their duties, and the mere receipt of money does not mean it becomes a consideration. Means the supplier who is providing the supply has a right to receive the consideration, the other party is obligated to give that consideration, and the intention is there to earn that consideration. However, in case of prize money, if you could see most of the prize money, there is no contractual, in the sense, for example, if a wins a man of the match award, it is something which has been given as a reward to him, not as a contractual relationship. And hence prize monies normally doesn't attract GST, because there is no, it's not part of the consideration definition also. Which led to one more issue, is some of our clients, what they did, they got viability gap funding. This is a different issue, where prize money is now over. The next question is viability gap funding. There is one new concept which has now been in increase. Viability gap funding is nothing but, you could have seen this for airports. For example, down south, airports are not coming up well. So the government said we will introduce a scheme called viability gap funding. So whatever the project is not viable on its own because of the funding requirements. Whatever gap is there in that funding, we will fill it up by way of our grant. The government can give. The government has now evolved one scheme where they are saying even all the public sector enterprises, even private companies can also give viability gap funding as part of their CSR responsibility, that is corporate social responsibility. So now most of these companies, not just VGF, all the CSR funding which comes to the supplier. For example, you are doing the construction of a, let's say, waste management facility in a very remote area where it is not normally viable. You are getting the CSR funds from the another company, and that is considered as a recognized CSR contribution, so they are giving it to you. So you are doing the construction with that particular funds. Now the question is, will this attract GST? Because whatever construction you are doing will not be in the name of that company. It will be in the name of you. That is, you are the contractor, you will do the service. You will get the money from that company, but it will be accounted as a CSR donation for that particular company. For you, you have to include that as part of your funding, whatever books of accounts you should maintain. So the question is, the ownership of that particular construction lies with you. You are not giving it back to that company. If you are giving it back to that company, then it's not called CSR. They have given it as a donation. So you own it, you run it, but they are giving it to you. So because it's considered, waste management is one of the objectives of CSR, so it has been recognized. So the question is, if I am receiving it as a CSR fund from another company, would that be treated as a supply, and should I pay GST for the same? In a very simplistic way, if you put it, it is donation received. Okay, in a very technical way, if you put it, it is a viability gap funding received from another company with a condition. Now remember, the donation received is just like that. You go, you ask money, they will give it. There may be some conditions with the donations, fine. But viability gap funding doesn't happen automatically. What they do, they will go for a bidding. Whomsoever asks the lowest viability gap funding, they will give it to them along with the conditions. You should do this, you should do that. If you don't do all these things, you have to return back the money, you have to give bank guarantee. So many conditions they would have kept. So the question is, would this attract GST? The amount is now this is one of the major CSR. So any CSR contribution received by the recipient and who is in turn doing an activity with that, would that amount be liable for GST? Would it be a supply? So these are all the issues I wanted us to discuss. So that's why I am bringing forward some of these points. What would be your view? Will this donation received in a very simple way, would it attract GST? Okay, let's say you are, I'll put it in another example. You are supplying books to a school. Supply of books is, other than education books, it's taxable. Okay. Now you have to supply the books at 10 rupees, but you got donation from another company. He says, I will subsidize 6 rupees. So you are selling the books to the school only for 4 rupees. So you are collecting from the school 4 rupees. The other 6 rupees is given by the donor. This is also donations received. Would this attract GST?
For 4 rupees it will attract.
Only for 4 rupees. How many of you think 10 rupees, the entire 10 rupees we have to pay GST? Anybody feels that the entire 10 rupees should attract GST? I sell it for 4, but I get 6 rupees from the company. So who is giving it as part of the CSR? So which amount should I pay GST? 4 or 10?
Should be up to 10. Subsidy from the government only should be considered.
On 4. Okay, how many of you think 4? Can you please raise your hands? Okay, good. How many of you feel 10? On 10 rupees we have to pay GST. Okay, so why do you think there's some of us 4 and some of us 10? So 10 rupees, because already 4 rupees got obviously available, that's the sale price. Why do you think 10 has to be included? Because if you see the definition of value of supply, it includes any consideration received. And if you see the definition of consideration, it will say the consideration can flow from the receiver or from any other person. And consideration excludes only subsidies received from the government. So it doesn't include the subsidies or donations received from outsiders. So it could amount to a supply. So it has to be taxed only on 10 rupees, provided it is linked to the price. Okay. Now the next issue comes in is, in this example, yeah. Which one? Sir, the donation technically is not for you. The donation is only for that school. The school is supposed to give 10 rupees, but they are giving only 4 rupees. From your angle, for supplying the goods, you got 4 rupees from the school and 6 rupees from the donor. So overall, for your supply, the value is still remaining at 10 rupees and not at 4. So effectively, it will be considered as only 10 rupees. Now the issue is,
With regard to viability gap funding,
yeah.
same thing you cannot
Okay, now the challenge in viability gap funding is I am constructing an infrastructure. Okay, I will do construct infrastructure, and that infrastructure will run in my name itself. I am not providing supply to any other person. So I am constructing infrastructure in my name, and for that I am getting money from you. Why should I give money to me? Is because that infrastructure is basically a public welfare projects. As I told you, waste management facility, it could be pollution treatment facility, whatever. So the question is, for constructing this I got some money from them, would that attract GST? Was the question. Because now this, yeah.
Received by the company who is constructing or the contractor?
Money received from the company to construct in their own name itself, but it is the money is received from a company which is called CSR. Yeah.
Sir,
Would it? Yeah.
regarding this 4 rupees and 10 rupees,
Yeah.
the donor, the CSR who is donating the fund,
Yeah.
can they give it as a donation to the publisher for educational purposes? Then he will raise, the publisher will reduce that price as the discount and give it at 4 rupees. Can it be treated like that?
So that's what has happened in this example. What has happened is I should have billed to the school at 10, but I am billing it to the school at 4 because I have got 6 rupees from the as a donation. Let's say the 6 rupees is directly given to the school. What the school will do? The school in turn will give that 6 rupees to the publisher, which anyway will become 10 rupees only. So end of the day, the government says that I don't want to lose revenue on this transaction. Even if you camouflage in any other way, the consideration is still there for this supply. Hence, you have to pay GST for it.
It is a specific school, but it can be a general for the schools in that area. Is it okay?
Still, if it is related to the specific supply, it will still attract GST. So the recipient of the donor, money, beneficiary is not relevant at all. The supply is only relevant. If this is related to this supply, then naturally it will attract GST. That's it. Now next question is, let's say if it is a capital donation, for example, for overall, for setting up the factory, for setting up the school, like that if I am receiving, then there are case laws in the erstwhile laws which says that it will not be part of the valuation. As the Commissioner was pointing out, most of the valuation principles were borrowed from excise. So in excise there are views which says that capital receipts will not be part of the valuation rules. So to that extent it is there, but again if it is whatever way, if it is a donation for this supply, it will be included in the value. So coming back to this VGF, this issue is about whether there is a supply or not. There was one clause in the GST law. In deemed supply, there was one clause which says agreeing to do an act or not to do an act or to tolerate an act is also deemed as a supply. So the question that came up was, the VGF funding is given to you under a contract only. Remember, donation means what? There is no contract. I give donation to you, you use it. But there may be some conditions. But here, the specific contract that will be written which says that I will give 1 crore to you. What you should do with this 1 crore is, 1, you should construct a waste management facility. 2, you should construct it within 2 years. 3, if you are not completing within 2 years, you should return back the money along with so and so interest. 4, you have to take care of the bank guarantee. You should give bank guarantee at the time of submission. So these are all some of the contractual obligations that would be there. And then the 1 crore will be given to you. But that 1 crore, if I am completing all these conditions, it belongs to you. I will not touch it. So the question is whether this can be considered as a consideration for an act, contract to do an act or not to do an act or to tolerate an act. For example, here I am giving that money to you. Why I am giving that money to you is to do an act. What is that you have to do is to construct the buildings. So because of the deemed supply provision, can this attract GST? This was the question. Actually what happened finally, this was an issue which came up to us. I am just sharing what and all we have got issues also, so that may be useful going forward for all. What happened in that example, we escaped somehow because of the reason that waste management was one of the functions of the municipality. And the functions of the municipality has been given exemption under 243. 243W covers functions of municipality. So we said it is not liable for GST. Instead of waste management, let's say if it was some other infrastructure which has been developed, would that attract GST? Was the question. Whether it is agreeing to do an act. What would be your view? Will it attract or not? How many of you say it will be taxable? This activity of getting VGF funding. One person. How many of you say it's not taxable?
Sir, it will be taxable only after completion of conditions.
There is no such clause in the GST law.
If condition not complete, we have to repay the money. Yeah.
That is secondary point. That is the next point. The activity is nobody will start the work assuming I will not complete. So its assumption is everything will go right. That's the assumption. I sold goods to you, tomorrow I may get it back. So I cannot say only that fellow uses the goods, I will pay GST. That will not happen. So it is not based on the future contingencies. It has to be decided as on today. There is a clear-cut contractual which has been entered into. So how many of you think this will not be taxable? This particular funding? One. So we have rest of us. Both views are not taken. So we are basically taking the proper view of a chartered accountant. That we give both the views, and then we say let the client decide on the same. Okay. So here regarding this point again, since this agreeing to do an act or not to do an act was not been yet tested, even in service tax, we don't have any case law in complete terms on this particular issue. As of now, the VGF funding has been treated as a capital receipt for that particular project, and hence we have concluded that it should not be taxed. So that's why we have taken the view, but again that is highly subject to litigation, which has been already given in the opinion also, subject to litigation. But this is the view which has been broadly taken, that VGF funding should not be taxed. In fact, there was a specific exemption for VGF funding in relation to airport. There was a clause in the negative list which says that VGF funding in relation to airports received by airlines is exempt. Because of that, there was one confusion whether the government's intention is to tax the VGF funding or not was an issue. But again, this has been broadly concluded as not to be taxed. The next one is recovery of money from the employees for food. This has now been largely debated, and AAR has come to one conclusion also. So that is, if most of these companies have canteen. So canteen, they give food and they may recover 50 rupees, 30 rupees, whatever amount. The question is, would that amount recovered from the employee, would that be taxable or not? Because the question was, is it a supply in the course of business? And the AAR recently has concluded yes. And I repeat, AAR ruling is not binding on all, it is binding on that particular process, and it may not be the final conclusion, but as such the view taken is supply. It is treated as a supply, and in my personal view it should be treated as a supply, in my view, but maybe people may have different views, because it satisfies all the ingredients of the supply definition. It is a supply in the course of furtherance of business. But having done that, if that becomes a supply, the activity of recovering money from the employee,
If that amount which has been deducted from the salary of the employee, if again it is paid by the company to the contractor who is providing the food, then whether it will amount to supply.
That's what. So the amount I am collecting from the employee is treated as a supply.
No, there are two legs to this. One is that you are collecting. Another one is,
you pay.
For example, for a contractor, he gives me a bill for 10 lakh rupees. I have collected from my employees 50,000 rupees.
Yes.
So what happens is that I am just merely collecting and giving the amount to the.
Okay, so in that case, our question is, I am collecting from 10 employees, 50 rupees into 10, 500 rupees, and I pay the same 500 rupees to my contractor. So in which case, can I consider myself only as an agent, and then I say I will exclude it from the taxability. Now, it all depends upon how your contracts have been structured upon. So the thing is, we have to structure the contracts, end of the day. So in the first example, we finish the first discussion, then I will come to this point. So as such, the 500 rupees which I am granting to my employees, AAR has ruled, it is a supply, and you have to pay GST at whatever rate, 5% or 18%, whichever rate. And the question is, that they talked about only that part. Assuming you have a contractor who bills it to you, in that case contractor will bill it to you only. That fellow will bill it to you with GST on the same. So if you are able to charge GST on your, if the decision is that you have to charge GST on the collections from the employee, naturally you will become eligible for input tax credit. So end of the day it will become a revenue neutral situation, because if you see the input tax credit definition, it says any amount which is paid for food is blocked credit, food or beverages, unless otherwise it is for further supply of the same category. That word is there. So if it is a further supply of the same category of business, in which case you become eligible for input tax credit. End of the day, the entire exercise becomes revenue neutral. That's it. Means
output tax liability, for that output tax liability, I can adjust this
input tax credit, and then end of the day it becomes revenue neutral situation. So to answer your question, this is how it is. But in case, yeah.
That can be only proportional. What the contractor bills you is say for 100, what I collect from the employee is only say 5%. So the 95 will
okay, now the next issue is in this, the ruling is that you have to pay GST on any amount you're recovering from the employee. The next issue is, I may pay actually 100 rupees to the contractor, but I may recover from the employee only 30 rupees. 70 rupees may be subsidized. So the question is, on which amount should I charge GST? It's another issue that comes in. Now which amount should I charge GST? 30 rupees or 100 rupees when I pay GST for the recovery from employee? Okay, now this is where one more rule comes into play. It says that employer and employee are considered to be related persons. Okay, and in which case they say that if it is related persons, you have to refer to the rules for valuation. The valuation rules suggest that you should take the open market value for such supply. Open market value means same food I have from outside, what amount, on that you have to pay. Now in this case, from the outside contractor, how much he has to pay? If he goes directly to the outside contractor, he may have to pay 100 rupees. So he may have to take 100 rupees and then charge GST and then make it revenue neutral. It's only revenue neutral exercise, end of the day. But 100 rupees notional value, the GST gets charged. Whereas on the the other side, we have 100 rupees, you have input credit and then knock it off. But there are 2-3 contrary views the government itself has given. For example, initially when GST was introduced, there was a press release which was given by the government on the taxability of perquisites given by the employer to employee. Like they are giving car, they are giving a lot of facility to the employee. The government said if it is part of their employment contract, then it will not be treated as a supply, it is only a consideration for the employment services provided. So in this case, if the subsidy is in a consideration for the employment services provided, if that angle is viewed, then in which case, then we can take the view only on 30 rupees, it can become taxable. So, but if that is taxable, then input credit also gets proportionately reduced. End of the day, again, it becomes a revenue neutral exercise. So the Kerala decision is in a way, it's only justifying that you have to collect, but take credit and close it off. That's the view which has been taken on this particular front. So,
supplying food at the concession rate itself is in your employment contract.
Yes.
Then in such a situation, still you will say that it is liable for GST, or can we take a stand saying that it is employee-employee relationship therefore also?
Sir, for the 70 rupees you can take the view. For the 70 rupees you can take the view, it is not taxable because it is part of the employment-employee contract. But the 30 which you are recovering it, there is no supply from the
employee to employee.
Employee to employer. So it becomes employer to employee. So in my view, I think it should be part of the value of supply. Okay. So yeah.
So what if the canteen is located inside a
Yeah.
economic zone?
Okay. What if canteen is located inside the SE cell? Yeah. So I'll come to that point. I'll finish this one. I'll take that point also. So now the next issue is, so what some of the practices which has changed. Post GST, there are a lot of business practices also changed, marketing techniques have changed, a lot of things. So what they started doing is, those companies now, see this is revenue neutral. When it becomes revenue neutral? Only when you are having input credit, where your outdoor caterer is giving you with the GST. But small entities may not have outdoor caterer with the GST. You may have big companies with outdoor caterer who is properly GST registered. Small companies and all may not have a registered GST vendor for outdoor catering. They will come and just give packets and go off. In which case also, if you say it becomes taxable, then it's an extra cost. Revenue neutral is only for big companies or those where you are having input credit. So in those cases, what some of the companies have changed their practices, instead of making the relationship between the outdoor caterer and the company, they made the structure or relationship between the outdoor caterer and the employee directly. That is employed directly in the sense that now you must be aware that you will be aware that there is a meal coupon which is normally given, food coupon, and food coupon is also exempt under income tax up to rupees 50 per meal per day, 50 per meal. That means per day you can have maximum of 3 meals within the normal understanding. Okay, so 3 or 2 meals which is given. So you give a food coupon to the employee as part of the employment contract, and that becomes exempt under the income tax because per day 50 rupees. So you can give, let's say, 100 rupees meal coupon. And this meal coupon in turn has been produced to the caterer, and they in turn supply against that meal coupon. So in which case what happens, the consideration is not flowing from the company, but rather the consideration is flowing from the employee to that particular caterer, and hence the contract becomes between them rather than between them. So this way the input credit issue, the recovery issues and all could get avoided upon. So this is one thing which has been done in the industry. So don't ask whether we suggested to somebody or not. So this is something which has been followed. Of course we suggested.
So if the employee directly pays it to the contractor, then the GST issue will not be there.
Yeah, so in which case the food coupon becomes the aspect, and then the food coupon is directly given to that contractor, and hence it could attract, it becomes a privy between them, and that way the input credit issue or the recovery issue could be addressed upon. But accordingly your contracts has to be restructured to ensure that this has been factored into your contract. So because there was one more issue, again I think it's a Kerala some ruling on this issue of outdoor catering. The question was, I am an outdoor caterer, I come to your company and I serve through your canteen to your employees, but billing will happen only to the company and I will collect money from the company. The question was, can I take the view, because they said any supply through a canteen or mess restaurant means, they said GST rate is 5%. So they said, can I take the taxability at 5% because I am supplying through canteen only? The AAR ruling said, no, it is not 5%, it has to be 18% because you are not supplying through canteen to the employees, you are supplying to the company, and you will be treated only as an outdoor caterer, you will not be treated as a canteen supplier, and hence you have to pay GST at the rate of 18%. This is the view which has been taken in the Kerala. But there are contrary views. In fact, what we thought was the other way around. We thought, okay, it is still supplied through a canteen, because there was one, again, circular which was given by the government earlier in the context of educational institution, where they said, if the supply happens through educational institution by way of canteen, either run by the educational institution or outsourced to the external person, it will be taxable at 5%. Like that it was there. So some people have taken advantage of that in all the other situations also. But because of this issue, they said it will be taxed. The outdoor caterer has to bill the company at 18% only. Like that they told, it cannot be treated as a canteen service. So because of this way of giving meal coupon and then getting it through the ultimate contractor can lead to some kind of a tax planning measure in this regard. So this is one point. Regarding the canteen part, whether regarding the SEZ, so if the goods are within the canteen is run within the SEZ zone, would that be taxable or not? Okay, first let me ask the audience. Okay, so what do you think? If the canteen is in the SEZ, should we pay GST for it or not?
Yeah, it has to be. Because it says by or to SEZ unit. So even if it is within the SEZ unit also, it will be taxable.
Okay.
It's consumed within India only.
Sorry?
It's consumed within India.
Consumed within, no, SEZ, no. That's why SEZ is treated as a foreign territory. So the issue is whether it should be taxed or not. Any other view?
Is it the authorized operations?
It should be for the authorized operations. Okay. So whether this is authorized operation, that list, then there's actually 58 default list was there earlier, where they said these are all authorized operations. Okay.
Suppose the caterer is providing to a particular company in the SEZ, then he can get the exemption.
Okay.
That is the contract between the employer, the company and the caterer is that it's a part of the contract with the employer, they provide the food.
Okay. So the issue is here, supply to or by an SEZ unit, apply to an SEZ unit is treated as a zero rated supply. Or SEZ unit or developer is treated as a zero rated supply, provided you satisfy LUT conditions, etc., etc. So if this canteen is run within the SEZ, by itself is not SEZ unit. SEZ unit is something which is recognized under the SEZ Act, you got the approval and then you run it. So mere running of a canteen within the SEZ unit does not mean you become an SEZ unit, so and hence it should be taxed. However, if you are again billing it to another company which is an SEZ unit and it is coming part of their authorized list of operations, in which case they can claim an exemption for the same subject to production of LUT in that regard. But otherwise, it would attract GST if it is not recognized as an SEZ unit in this regard.
If I require money from the employee?
The SEZ unit recovers money from the employee. Okay. So the next issue is, what if the SEZ unit recovers money from the employee? Okay. So technically this is technically it's a B2C activity, and in my view it should be, because there is no import or there is no export in this regard. So I think it should get taxed. Let me also check on this front and then come back to you. Does this, yeah.
That definition clearly says supplied by a SEZ unit or to SEZ unit. So if it is supplied by a SEZ unit to the employees, then I think...
No, it's not by default. Zero rated supply by default doesn't include supply by SEZ unit. Zero rated supply definition includes only supplies to SEZ unit or exports. So supply by SEZ unit or to is what you are talking about, I think, is for IGST interstate supply definition only it says, but is not talked about as regards taxability. So in my view, it should get taxed, but again, let me check on that front end, because again there are some open issues which we will also have. So I'll just clarify on that front maybe by the afternoon. Okay. Next issue, is there any break in between that?
Yes.
We'll continue or break? Okay, sir. So we will continue after the break. So we have actually have not crossed the first slide. There are more points to cover after this. Thank you.
Before that, may I request Rajeshwari, CA Rajeshwari, to be here to just give your introduction very briefly and sum up the past 1 hour proceedings.
From Keynote. For any program, the first session is very important. It sets the flow. So to be very honest, myself, including some of the few members, were quite down in the beginning. We were like about to start moving, and this session it has set a flow which I believe that the entire 4 days program would continue. It was a very great presentation by you, sir. We didn't even realize that it was 1 hour. Only when you said it felt like 1 hour. And many new terms like this cryptocurrencies and this viability gap funding, it's all very new to me. I believe some of the few fellow members also would feel the same way. And a very in-depth discussion on a simple term like supply of food to employees. How many variants we can bring up? See, your presentation made us think and ask questions in a very different way. We're also waiting for the other slides too. Thank you.
Thank you, Rajeshwari. Friends, we'll assemble back in 10 minutes time. Yes, sir. Good. Any seat other than your seat. Then it can be next seat also. Sir, pacha sata potaru anga okkakoda sir. Sir, not the same seat, different seat. Yeah, anything, any other seat. But not the same seat. That was yours, no? You were sitting there. Oh, that, okay, right, then fine. Sir, Parthiban sir? Okay. And Mr. Parthiban will be giving the introduction of the afternoon speaker. I must mention here about the afternoon session, classification. You will definitely see a mind-boggling session in the afternoon. Actually, even a single second you may not have a drowsiness, and you will literally, it will be a surprise that what an amount of information we would have missed after Mr. Parthasarathe's deliberation. So before Mr. Srinivasan continues, may I invite CA, yes, Mr. Vishnu Kumar Menon, partner of Balan & Co. from Kochi. Friends, join your hands welcoming Mr. Vishnu Kumar Menon. He will introduce himself and also give a brief about what he has understood in the first session.
morning, everybody. First of all, I am not Vishnu Kumar Menon, I am Vishnu Prasad Menon. Okay. I am a chartered accountant practicing in Alua. It's in Alua and Kochi. Okay. We are a firm of 9 partners. My father started the firm. It's Balakrishna Menon. Okay. Regarding the session, we have covered only the first 4 lines. And 1 hour is over. 6 more lines to go. Recovery of food by hospitals. I don't know whether we can get our food before this, the lunch break. Hats off to you, sir. Good session.
And in between, so I am not mentioning who will be summing up before the lunch. So maybe by 12:30 we will, I will request Mr. Sampath Kumar sir to announce the name of the person. So meaning all of you have to take notes until such time. So we are actually watching, when we when I announced Ms. Rajeshwari's name, only Ms. Rajeshwari was taking judiciously all the notes of all the slides. Okay, so now we wish all of you take the notes, and maybe Mr. Sampath Kumar will announce the name a minute by 12:30 p.m. Okay, thank you.
Thank you. So we just saw a few issues which we face, and of course most of the industries would be facing this also. Okay. So the next one was the next topic was on recovery of money for cab. Again, that goes in the same footing as the food. So that means you may have to charge GST and then recover it, take credit on the output, and then close it off. So that's how it could be. The next one was okay, when a fixed asset is Okay, if it is okay. Now the question is before getting in case if I am not charging anything and giving free car to my employee, I give it free to my employee for their usage. Most of the big companies have this. Most of the companies have this policy of giving free car, maybe for accommodation, etc., free to their employees. Would that be considered as a supply? Because it's free only, should be a supply. Normally, free supplies are not taxable, but if it is between related parties, it would be taxable. And employer-employee is coming under the definition of related parties. So there is an issue which triggered, because normally if there is no issue also, we have to trigger something, so that we will have something to think on. So the issue which was triggered was employer-employee is related party. So anything you are giving free to the employee, should that be taxed or not? That's the question which came up. And consequent to this, we also of the opinion, and then government gave a press release in July, somewhere in early August, that if that is basically a perquisite, and any perquisite which is given to the employee, and if it is spelled out as part of their employment contract, and it is also taken for calculating their CTC, cost to company, would not be treated as a supply, and it is only be considered as a consideration for providing their employment services, and hence it will not be liable for GST. This is the conclusion. The press release itself was given from the government side. It's early August, they have given this press release. Hence, anything if you are giving free perquisite would not be taxable, provided it is structured within the employment contract relationships. But what happens in some of the cases is, this motor car, what this company does, they will buy the motor car in the company name, they will use it for, the employees will use it for 4 or 5 years. After the 5 years is over, they will give the motor car back to the employee. They will sell it rather, they will not give it free. How they will calculate the amount, that's where they take the income tax depreciation. To avoid the perquisite calculation, they take whatever original cost minus some 20%, I think. Is it 20% income tax? For every year there's some 20% depreciation is given under income tax. Sir? No, 15% is for depreciation under the income tax for the company. For the perquisite calculation, I think it is 20%. I don't know. So indirect taxes I don't know properly. So direct tax suttama theriyadhu. So I assume that it is 20% for perquisite calculation. Okay, so 20% they reduce year on year. Balance value, whatever is there, they sell it to the employee at that particular rate. The question is whether they sell that car to the employee at that time after 3-4 years, would that be taxed or not? Will it be treated as a supply and would it be taxed or not? Was the question. What would be your answer? The answer is yes, it has been taxable, and the government also said in various indirect ways of communication it has to be taxed. The issue which came up prior was which value you have to tax it was the question which came up. Should I tax on the sale value or any other amount? Should it be the basis? They said that is where the government gave one calculation methodology also. They said if you are taking input tax credit for this car originally, if you have taken, then on the entire amount you have to pay. If you are not taking the input tax credit originally, then they said because at the time of buying the car you will not take credit. So when you are selling the car again you are asked to pay GST, then it becomes double taxation. So after a lot of representations, the government gave a final notification which said that if originally car was purchased and you have not taken credit for the same, whether it was purchased pre-GST or post-GST, anyway car is not eligible for credit. And when you are selling the car, whatever sale price, entire sale price you don't have to pay GST, sale price minus WDV, you reduce it. On the balance amount alone you pay GST. That is only on the surplus amount which is there, you pay GST on the same. Now the WDV how we should calculate? That they said you have to take the cost minus depreciation. The beauty is depreciation under what? Yesterday one of our client has sent me a mail. Sir, all these are fine. We just copied the notification, pasted the procedure and sent it. He went through that and asked, sir, depreciation, okay, under which act? Is it Income Tax Act or is it Companies Act or is it the company's policy? Which act should be reduced? Anybody has? There is no clear-cut wordings in that law, but as such we take the Income Tax Act as the base, but it can be different. As I repeat, even it can, because for perquisite calculation they have taken income tax, so we have taken that as the base. And the question is, Income Tax Act means from which angle? Should it be from the company's angle where they classify this as plant and machinery and take 15%, or should it be from the angle of the employee where for perquisite calculation they take 20%? Which number should we take? Again, as the issue which has come up, but as such they said WDV. So this is open issue. It is subject to, of course, each person's way of understanding things. But as such we take Income Tax Act, company's depreciation, company angle depreciation, but again it can be subject to different views. So finally they have now concluded entire car value you don't have to pay GST, you pay only on the differential amount, which is the sale value minus the WDV, and then balance amount you pay GST on the same. So this is the conclusion they derived on the sale of motor car. And of course any other assets if you are selling, this was only in the context of motor car, any other assets which you are selling, entire value will attract GST. What if you have purchased it pre-GST without input credit and you are selling it now? You have to pay GST because it is in the course or furtherance of business, it will attract GST for the same. So that's it. So any sale of fixed assets is also in the course of business, it will attract GST. Motor car alone, they said differential amount you pay GST on the same.
So you will attract GST only on the supply value. What I am putting in the tax assets.
You are talking about for?
Fixed assets, any fixed assets.
Any fixed assets. Yeah, supply value.
Supply value.
Entire supply value. Yes.
What I am putting in the tax invoice.
What you are putting in the tax invoice should be what you are getting.
That's what. See, there is no.
Okay, I'll do one thing. Yesterday, what happened? One of our clients, I'm just telling all these live issues which he is getting. What he did is, he had an old UPS. He gave the old UPS and he got the new UPS. Okay, old UPS, the fellow took it for 3,000. The original new UPS cost is 25,000. That fellow gave it for 22,000 because old UPS is 3,000 rupees. The question is whether the 3,000 rupees will it attract, because they have reduced it and gave it for the net value. So here invoice itself is not there. You are not getting any invoice. So the main question is, you are not raising any invoice here. You are just giving it as a DC. Just giving it to him. That's it. Now in this case, you should pay GST or not.
GST is there.
Yeah, so GST has to be paid.
3,000 rupees is
inclusive of GST or 3,000 plus GST. Either way they are agreeing on.
The thing is that what consideration is flowed out. 3,000 rupees inclusive of GST. The tax invoice means You cannot say that you cannot pay GST.
Yes.
So naturally 3,000 rupees equal GST.
So then you have to backward and find out the GST on the same. Correct. So the thing is, we still have to pay GST even in case of exchange, where you are exchanging an old asset for the new asset. The old asset should go out with GST on the same. And more importantly, it's relevant when you have taken input credit on that old asset. In fact, actually, this time when you are finalizing a balance sheet, it is quite essential to know what are all the assets which were purchased pre-GST scenario, what are all the assets which were purchased post-GST scenario, especially this year balance sheet when it is going to be finalized. At that time, the fixed assets register exactly whatever additions which were made in this year. You should have a breakup pre-GST before September, before July how much, post-July how much, and what are all the assets. Maybe you should have a coding system and fixed asset coding maintained so that you know this was purchased pre or post. So accordingly, because why I am talking about that point is more relevant. Let's say you have a laptop, you purchased a laptop in the company name. After 5 years over, what they will do with the laptop? They will give it to some employee who take the laptop free. Sometimes they will give it free or at a very concessional rate. When they give it free, should I pay GST for it? I purchased laptop today. I gave after 5 years free to the employee. Should I pay GST for the same?
Originally input is claimed.
Yeah. So it becomes a deemed supply, because if you have taken ITC on the same in this laptop, when you are giving it free, it is deemed as a supply and you have to pay GST on the same on the notional value. So in which case you should know whether you have taken credit on this or not. Whether it was purchased pre-GST scenario, post-GST scenario. The tracking should be there, maybe with a coding system, so that you will know whether it is post-GST purchased. Hence, you have to pay at the time of giving it free. Otherwise, this issue will come up when you are going for later point in time. Okay, so, yeah.
In coming back to the same issue, sale of fixed assets.
Yeah.
If the tax invoice value is less than the book value.
Okay, so what? Doesn't matter. It can be less. It's your commercial price. The law says price. So it can be less than also. Next, about joint development agreements. Yeah.
In sale of fixed asset, there is a provision, a transaction value on 4% per year.
Yeah, if you have taken credit originally, then if it is a capital goods, then they said original credit what you have taken minus a percentage, 5% per quarter you have to reduce, then find out some amount today and then pay that amount or the actual sale value into the GST rate, whichever is higher, you have to pay.
Now whatever you said is no credit is taken, fixed asset.
Yeah. Okay. Next one, joint development agreements. This is another issue. See, all these are, when we were there with the enforcement officials some time back, this is one of the issue which is up for scrutiny now, is this joint development agreement. So what is joint development agreement is, you have a landowner, you have a builder. This builder will construct on the land belonging to the landowner, and after the construction is over, what they will do, they will hand over 2 flats to the landowner, 3 flats they will sell it to the outsider. This is the normal agreement they have for joint development agreements. This is very normal for most of the builders now, is they will hand over few flats back to the landowner and sell outside. Whatever they sell outside is their margin. This is how they agree on. The question is, let's say they are constructing 5 flats. Each flat is worth 1 crore, totally 5 crore. But in that 5 crore, how much money he will get? Builder, he will get only 3 crores, because only 3 flats is selling outside. The 2 flats is giving back to the landowner himself. So for that he will not get any money. So the question is, on which amount GST should be paid for the builder? This is a very common issue for most of the everybody. Construction industry operates on this model. On which amount GST has to be paid? Should it be on 3 crores or 5 crores? Because 2 crores they don't collect anything. Yeah. Okay, so the answer is only on 5 crores they have to pay. So 3 crores is for supply to outside, they get money. It's very clear. The 2 crores is the flats they have handed over. You cannot say it's a free supply. Okay. Why they are giving it back to the landowner? Because they have allowed him to construct. He got a development right over the land. So for which he is giving the flats, and hence it should attract. On which amount you will pay? Because you have not collected any amount, you have to go based on valuation rules. And valuation rule says you have to go based on open market value or value of like goods or value of goods of like quantity or quality. So in which case you will have to go based on similar flat. The flat that is sold outside, based on that you may have to take the basis. You may ask, what if the square feet is different, what if features are different? Accordingly, you have to make some adjustments. But as such, even for the flats handed over back to the landowner, it will get attracted. This is fine. This was there under service tax also, and 90% of the people have not paid service tax for this activity. Maybe few people have paid, but many other people have not paid. Okay, but this will come as an issue now, as I could see from the department. Now, the next issue is when you have to pay the GST. So, what time you have to pay the GST? Is it at the time of giving the right over the land to the builder? Because the right over the land will be given at time 0. The flats will be handed over after time 2 years, let's say, after T2. The question is when GST has to be discharged on the same. Now this is where the government gave one notification on 25th January 2018. Okay, this is a very recent notification. I remember it because it's very regularly used notification, where they said that technically, if you see, the right over the land has been handed over at time 0 itself. There itself consideration has already flown to the builder. So since consideration is received, because construction is a service, it will be payable at the time of receipt of consideration or raising the invoice, whichever is earlier. So technically it is attracted at that time itself, where he has not even started the construction, already over, he is liable for GST. This will create definitely issues for the same. So 25th January only this notification came, which said that only at the time of allotment letter being given to the original landowner, that time only it will be treated as time of supply. So they said that time only you have to pay GST, is what they have deferred it. They deferred the time of supply till handing over of the possession letter. So this came up only 25th January. So prior to that, department will definitely take it up for issues. So that you may be have to be ready with the answers.
So regarding the joint development,
yeah.
3+2, and in the 2 for my own land, there is an undivided share of land.
Yeah.
Am I eligible to reduce that cost and pay for the balance, the GST?
Your own land means? No, see, you are not the builder, sir. Only the other person is the builder.
Yeah, yeah.
So the builder.
What you sell is different, what you get back is different. They are not the same.
So the question is whether you are eligible to deduct the land portion. Yeah, so his question is quite simple. To outsider I sell 1 crore, which is including UDS, undivided share of land. To the landowner, why should he sell UDS? Because already he is owning the UDS. He will be selling only the construction portion. So in which case, you have, there is another issue which is going on there, but largely agreement is that if land value is included, you have a, deduction of 1/3 available in your overall value. Land value not included, then you have to pay GST at the rate of 18%. So 18% will apply on the construction cost. So what is prevailing in practice is, they take outsider, let's say 5,000 rupees per square feet. In that 5,000 rupees per square feet, they reduce what is the land component. Balance value, they assume it as construction and then they charge GST on the same for the landowner portion. So this is what is happening in practice.
In effect, it can be reduced.
No, normally in JDA.
There's no question of reduction because you are not including it. You cannot include it.
You cannot.
Normally in
there is one more issue in sideline.
Yes, sir.
Landlord is not selling the land. He is giving only
Development right.
Has he to pay
GST? Okay. Now another issue is sale of land is excluded from GST. But when you are giving only the right over the land, over the land to the other party, whether that is also excluded from GST is an issue. But because normally the definition of land includes any
sale of land only exempted.
Yeah, correct. But in stamp duty, I think land includes any benefits to arise out of the land also. That's how we have taken a view not to pay. But again, that is subject to the litigations. Yes. Okay. So broadly, yes. Yeah.
At the initial stage, they identify the flats which are to be allotted to the landlord.
Yes.
Then will it change the timeline? Will it be T0 or we can take benefit of the?
No, you're talking about the notification.
Yeah.
See, notification is valid now also. You're saying it's allotted.
Yeah,
see, sir, allotment can come. Possession letter has to also be given. Possession letter can be given only.
Your mention of the flat numbers will not change.
Yes. It will be 20. I mean, the notification is a beneficial notification for the assessee. It says that you don't have to pay at time 0. You pay when you are making the allotment and possession. So you don't have to pay at time 0. You pay only after T2.
So,
yeah.
The notification of 25th January 2018, it is notification number 4, I think.
Yeah.
And it talks about both the situation, it covers both the landlord as well as the builder.
Okay.
It gives the impression that
Landlord
the landlord has to get himself registered and pay that tax when he gives development.
Right.
It talks about only the time of when the landlord has to pay. Landlord has to pay the GST at the time of handing over the allotment letter or at the time of execution of conveyance deed in favor of the builder.
So the issue is whether landlord should also be liable.
Liable to pay.
Yeah.
It gives the impression.
Yes, sir. Understood. So I'll take your point. Maybe I'll also have to check that aspect. As such, what we are paying is only for the builder, but landlord should he pay is an issue which also has to be inquired into. Okay. So, but now that notification is there from January 18 onwards for assessing. The next one is about. So this will increase the cost of construction for all these. Handing over process. 18% cost will increase for all these cases. Sale of repossessed assets. This is actually in the context of only banks and NBFCs where if somebody has not given the loan back, somebody has not repaid the loan, then in which case they will, what the bank will do, they will take over the asset and sell. But technically bank is not the owner. Bank only just repossesses and sells it. And they will recover their money. If any surplus is there, they will give it back, but otherwise they will recover the money and close it off. The question is, when they are selling that repossessed asset, would that be liable for GST? Because they are never the owner. But should it attract GST is the question. So sale of, this was an issue even under the state VAT, all the state VAT tax, this was an issue. I think in Tamil Nadu, it is against the assessee, if I am not wrong, correct sir? So this is a HDFC case also, where it has been held against the assessee. They said, if that is done by the bank will be treated as a dealer and they have to pay VAT for the same because they are treated as an agent, and then it has to be liable for VAT is the view into the Tamil Nadu Act. And in GST also it is liable because provisions are there. GST also we have the same agency provisions are there. Normally when they are taking the loan itself, they used to give a power of attorney to the bank, saying that in case of non-payment, you can take it over and sell. As an agency relationship, it is given. And there is a specific valuation provision also is there in relation to repossession. So what it says, whenever you are repossessing it from an unregistered person, then it says you have to pay GST. On what amount you have to pay GST? Again on the sale price, whatever amount you are selling, minus the WDV. Again they are giving the benefit of WDV. So balance amount you have to pay GST on the same. Sale minus WDV, on that amount GST has to be paid. Now how to calculate the WDV? The original cost minus the 5%. They are given the number here. Here it's not depreciation rate. They are given the number as 5% from the original date of purchase. Now note, it is not from the date of giving loan. It is from the date of purchase. It means if you are refinancing a second-hand vehicle, the 5% should be calculated not from the date of giving the loan, but rather from the date of purchase. It has to be calculated. On the difference value, GST has to be paid. So this is in context of NBFC and banks. Because this is a transaction which happens outside their books, it will not come in their books of accounts itself. What will come in the books of accounts is when they are selling it, they get money. That money alone comes undebited. You will not know whether the debit is happening because you got the money from the customer or you got the money from recovery, unless otherwise you get into the details. I think this was a very important point under the bank audit. When the bank audit was done, this was also one of the points that should have been considered. When there is a repossession and sale, at that time this issue may come in. So you may have to look into this particular aspect more carefully. These are all assessment points for the offices also.
Valuation is 5% per year?
Per quarter. Okay. Recovery of food by hospital. This was a circular given by the government. They said food recovered from the patients, inpatient. Inpatient, where the inpatient means their diet will be suggested by the doctor. In which case no GST. Outpatient or patients or attendants, any other person, you have to pay GST on the same. So how I will know whether it is inpatient or outpatient. Mostly that is a confusion, but maybe inpatient means they will bill it along with their overall other claims. Maybe that could be the basis to decide. So otherwise this is something which has created more controversy. So recovery of food by hospitals from outpatients and others is liable for GST. Is a view which is now clarified. Okay. Next, this is about the consideration part. So I'll just quickly move off. The supply without consideration, there is another major important aspect to be looked into. That is, even if normally when you are receiving money only, you are liable. Free also, certain cases they say liable. Okay, so to put it in a very simple term, if I file income tax returns for my friend, I don't have to pay GST. If I file income tax returns for my wife, free, I cannot charge for that. Free, I have to pay GST because it is supplied to a related person in the course of my business. So I have to pay GST for the same. On which amount I should pay GST? Same, again, the same income tax return, if she files from another chartered accountant, whatever fees she will pay there, on that amount, GST has to be charged by me. Actually, the wording of open market value used in the law, if you carefully see, it says the value of such goods obtained by the recipient from another person. They are not told from supplying angle. They are told from the angle of the recipient angle. If he obtains from a third party, whatever amount he has to pay. So that is, if not there, then you go for value of like kind or quality. So in this case, there is another issue which could come up, is about there are a lot of transactions where there could be related party transactions, like supplies between related parties could happen. Cost sharing, it was there in break also, we discussed this point. The rent, property may be owned by the holding company, but in the same property, subsidiary company may also be there. They may not be paying the rent, but technically that is deemed to be a supply because you are allowing your premises to be used by a related party without consideration, in which case it could attract GST implications. So what we need to do basically is analyze all the interactions between the group company and the subsidiary, not just group and subsidiary. It can be between husband and wife having two proprietors. It can be partners and partnership firms. So there are a lot of relations they have defined. So you have to see all these things and then say whether it will attract GST or not. So main thing is, we have in India same building, there will be 3-4 companies. So there itself the related party implications have started, right from renting of property to sharing of accountant. So one accountant taking care of 3 companies. So one accountant will be, as an employee, will be in one company, but will be used by company A, company B and company C. Technically that's a sharing of resources. So business support service will get attracted. So you have to look at all the interactions between the group companies and identify 0.2, 3, 4, 5. These are all the interactions. For this amount, you have to charge GST. Now, what value? Again, it says open market value. There is a one big relief they have given in the government. They said, if you are raising an invoice with one consideration on the same, that is enough. That is, invoice price itself can be taken as the base. You don't have to go based on open market value, invoice price. Now the next question is, can the invoice price can be 1 rupee? Can I raise invoice for 1 rupee saying that support for server, support for employees, support for everything put together, 1 rupee. Can I raise an invoice with 1 rupee and then charge GST and pay it to the government, saying that, taking the advantage of that rule?
Yes. Yes.
No. Why no? No, because the law says if price is mentioned in the invoice, that price will be deemed as the value of supply. Open market value and all are there, sir. What they are saying, if the recipient can take input tax credit fully, then whatever price is mentioned in the invoice can be taken.
That is for the unrelated parties.
No, that is only for the related parties.
Related parties valuation rules should apply.
Yes, sir. As per valuation rules, first clause is open market value. Second clause is value of like kind or quality. If not there, then you have to go based on cost plus 10% option is there. Then there is one more proviso which says, if the supply between related parties is at a price, if invoice is raised, the price mentioned in the invoice shall be deemed as the value of supply, provided the recipient can take full ITC. It should be 100%. They should be able to take 100% ITC on this invoice. If they are eligible, then you can raise invoice for any amount and that will be taken as the value, provided you raise the invoice. If you have not raised the invoice for the same, you know that last year is over. By now you should have raised invoice for the last year, that between related party with some amount, and then that will be deemed as the value of supply. Now remember, invoice, question is, should the invoice be commercial invoice or GST invoice? Because in GST when they refer, it has to be only a GST related invoices. Why I am talking about commercial invoices, GST invoices? Because commercial invoice can be raised only if it is between two different legal entities. If it is a branch, you cannot raise a commercial invoice. You can at best raise only a stock movement invoice. That's it. So in which case also it is an invoice as per the rule 46, which is the GST rules. So in which case invoice has to be raised so that full ITC is eligible for the recipient. But in case if the recipient is not fully eligible for ITC, then you cannot go based on invoice price. You have to go based on open market value only. So this is one factor which has to be looked into for the last year. Wherever all the interactions are happening between related parties, there is one thing which they have to look into. It's a very, very important point to be looked into. Otherwise, yes sir.
So that means,
yeah.
Suppose if the recipient have both exempted and taxable supply.
Then that's it. You cannot go for...
is it invoice value? I am eligible for 100% input tax credit based on the invoice.
Yeah.
But because of 42, 43, I have to...
So the law uses the word whether you can take full ITC. The word uses full ITC on this invoice. If the recipient is, let's say, hospital, they cannot take ITC at all. If the recipient is providing partly taxable service, partly exempted service, then they can take only proportionate credit on the same. In which case, you are losing the eligibility to take full ITC. In which case, you have to go only based on open market value. The intention is very simple. So long there is no revenue loss to the government, we are not bothered. Yes, sir.
Decision of the subsidiary companies which is functioning the same premises as the
Yeah.
holding company.
Yeah.
They are, Usman Circle is insisting on rent agreement, putting the rent of the market price only.
Market price. So I think that whatever they are saying may not be taken as the final authority in the law.
But
they are insisting.
Unless they approve, we cannot get a purchase certificate.
That's practical difficulty. So அது வந்து நீங்க அதை எப்படி அட்டாக் பண்ணுவோம் அப்படி பண்ணணும். So you have to, they say you have to insist only on market price, there is no option. But you can convince them. If they are not convinced, then you have to go along with their tunes. That's it. But otherwise, as per the law, it is not required to have the market value in place. So basically, they are bringing all the domestic transfer pricing into the GST provisions in this regard. So this is one thing you may have to look at, especially when the last year is already over. Invoice should have been already raised. Otherwise, you better raise an invoice now, and also it has to be included in the GSTR, because you can include invoices only till September of the last, for the last financial year you can include till September returns filed. So or annual returns filed. So this has to be done. And one more issue is about okay. So these are all related party related transactions. So I'm just going a little faster now. So consideration is about supply for a consideration. Next is about the business. The word business has been defined. I'm not getting into the definition of business. So but business has been defined. Now the next question is, let's say I'm a painter. I sell only one paint. Only one painting I did. I'm selling it and getting money. Should I pay GST for it? Should I pay GST? Yes. The answer is yes, I have to pay, because vocation is also treated as business. Vocation is basically any skills or any interest you have developed, and they said irrespective of regularity. So regularity is never a condition for business. So even if it's a one-time activity, it can still attract a supply and could lead to GST scenario. In fact, there are a lot of cases people may do one-time activity, just one-time business. So that also could land up in problems. They have to get registered and pay GST for the same. Okay. Next,
in case of a painter, a situation may arise. He has made the painting in Chennai and sold, say, in Delhi.
Yeah.
So what will be the place of supply?
He's selling from here to Delhi, no?
No, he is taking there, putting up an exhibition and selling there.
Okay. Okay, but where is his place of business?
Place of business in Chennai.
Okay, you have two options. Either you can raise an IGST bill from here to the ultimate customer, or another way is you may have to take a casual taxable person registration in Delhi and then do it, whichever way. But first option is simplified to handle. Second is taking casual taxable person and then paying advance GST on the same, getting back refund is a big challenge. Maybe first option should be the ideal way to go and finish it.
But when the sale is exhibition come sale, then probably we may have to mandatorily go for
which one?
Exhibition come sale.
Then
we may have to go for casual taxable person registration.
Why?
No, then you are making the supply from that particular place. Right?
Your decision making, your control, everything is being controlled from here, right? Why should you take a step? Is it coming under a fixed establishment or business establishment? Only if it's coming under fixed or business, it has to be registered.
It is satisfying the criteria for the casual taxable person. I don't have a permanent establishment there, and then I'm making the supply from there. So
I think you are getting into location of supply, supplier definition. So in which case it says who occasionally undertakes from any place where he doesn't have a place of business, in any state where he doesn't have a place of business or fixed establishment. So here in our view you can straight away raise an invoice from here itself on the final customer, because in fact if you see DC provisions, there is one provision for delivery challan where it says any other movement other than supply. So you can very much transfer to the other location by way of a DC, and then you can make a sale from there and raise an invoice from here. So that's how we can conclude. Otherwise, if you register there as a casual taxable person, then here you will be registered as a normal taxable person, and any movement from one registered person to another registered person will become taxable, and from there if he makes a supply, it becomes taxable, and he has to take input credit. So many issues will start flowing. So the best, that is a very idealistic way of doing things, and it will definitely cost time, money, etc. So the ideal way is you move it through DC, because section rule 55, which talks about movement of goods under DC, allows any goods other than by way of supply. So we move it there, make a sale, and then raise an invoice and close it off. So that's how it is concluded for us. Next, so a business is a broad definition they have included. It says any vocation, etc., etc. is a business only. And most importantly, I just wanted to focus on some of the specific issues in this regard. Let's say electricity charges recovered by the flat associations from the companies. From the flat members, would that attract GST? Because the definition of business specifically says association providing business, collecting money from the members is a supply. So all flat associations are doing business only. But one thankful point is they said if their MMC, monthly maintenance charges, does not exceed 7,500. Now this came up from again January. Prior to January it was 5,000. So if their monthly maintenance charges was 5,000 rupees, no GST. From January 7,500, no GST.
What about water charges, sir? Because YMR, nobody is having water.
Yeah.
They have entered a monthly contract with the water company.
Yes.
They are paying advance money. They are deducting from the water supply. What will happen in that case?
Water charges they collect from the flat owners.
Flat owners.
Yeah. So there are two things which will be in dispute. In fact, three things. One is recovery of electricity, recovery of water, recovery of diesel.
And again, New Year function, other things.
See, the exemption actually, if you go based on the definition, it is one exemption. It's only for the rupees 7,500 per month per member. Maintenance charges 5,000 per month per member. So if it is ad hoc amount which is collected as a whole, this issue was there under service tax, sir. Nobody bothered about it. Because GST came up now, so we are looking very seriously into these issues.
You have to pay or not? You don't have to pay.
If it is an ad hoc amount, yes, it is not coming part of the maintenance charges as a whole. So it would be, unless otherwise, that activity is exempted. For example, you are doing a music festival. Admission to music festival is exempt up to rupees 250. Okay. So if you are collecting that amount, 250, right? 250 rupees. 500. 500. Okay. So 500 was under service tax. 500 then, okay, sir. Okay. So 250 or 500, whatever number is exempt. So if you are collecting further, it is exempt. Otherwise, if it is a lump sum amount collected, it could land up in taxable scenarios. Annual fees or one-time charges collected could land up in, unless otherwise you are accounting in such a way that it is monthly maintenance accumulated as an annual amount. If you are able to position it that way, it's fine in the accounting system. If it is a one-time annual fees, as per the bylaw, you are collecting only once in a month, because the definition is talking about only maintenance charges per month, in which case this could land up in the taxable scenario.
So water charges will become taxable?
No, I'm talking about the lump sum amount which you are collecting. For water charges and electricity and diesel, these three things. Diesel is outside the GST scope. Electricity supplied by the the TNEB, etc. is exempted. Whereas for others, there is no question of, exemption was not given specifically. So we checked this with the GST commissioner also, Supendra Gupta. He said department will tax that. So electricity and water, they said we will take away, it is taxable. So, but we have taken the view water can be given exemption provided it is a untreated water. Processed water means taxable. Untreated water, because the water is exempt if it is untreated.
Tanker supply, not a processed water.
Yeah, that's okay. Right. Because I think tanker supply also distilled water also coming, I think. Right. So if it is unprocessed water supplied, we can take the view it is exempt. Electricity, only if it is by the electricity. Yeah.
Okay, Tamil Nadu government gives emergency maintenance work for Viranam tank maintenance work to PWD contractors. These are not regular tenders, it's an emergency work which is being done. The work goes on for 2 months or 3 months. At the end of the work, after the inspection, the payment is released. There is no GST, nothing, no invoice is raised. Now in this case, how do you pay GST? Do you need to pay GST?
No, Tamil Nadu government is giving a work to a contractor.
Yeah, now outside the tender process. If it's a tender process, you pay 12%.
Some contractor is.
These are emergency works for maintaining Viranam project.
Okay.
Okay. So it's after 3 months work, they release 50 lakhs, 60 lakhs for this work.
It is taxable straight away.
But they don't give you, the contractor doesn't raise any invoices. But after the inspection, the government releases the fund.
Sir, as such, there has to be a, without any, whether the government requires invoice or not, it is a responsibility of the contractor to give an invoice under GST, under normal business parlance also. So whether the government
decides the rate
amount, correct, but
it's not the contractor who
to
decides.
process the amount, there will be some document, right? There has to be raised. So in which case it would attract GST.
But is it not services provided to the government?
Yeah, services provided to the government, correct. But whether it is coming under exemption list, we have to look at it. It could be under the exemption list, sir. Like water supply is actually coming under the exemption. So if it is coming under that exemption list, no GST. Otherwise, GST would get attracted for. Yes, even if invoice is not raised. In fact, that becomes secondary non-compliance also. It has to be done. Yes.
If the flat association recommends exact amount of electricity charges and water charges, EB water charges, exact amount divided by whatever number of occupants.
Yes.
Exact amount is collected and same is paid over to the GNE.
Correct.
Here we have to only
Reimbursement. Pure agent you are saying.
Yes. In that case, I don't think.
Sir, as such, it is.
Subscription number.
That's what. So the issue is whether it can be considered as a pure agent. We have checked this with the department. I'm telling you what the view the final commissioners have told is, we will not take that view as a pure agent because the EB and all is only in the name of the association and they are the recipient and they in turn provide the service to the members. So they are not considered as an agent, but they are only treated as a supplier. And separately they have to raise an invoice on the same because they said any supply by a club, association or any such body for providing facility to its members for a subscription or fee is taxable. So this electricity, water.
Is there a subscription or a fee?
Yes.
Because I am exactly collecting the same amount.
Correct, sir, but just because we collect the exact amount does not mean we automatically become an agent. One view, you have to satisfy all the conditions of the pure agent. So you are not, because the invoice is in your name, we are only in turn recovering it. And what you are collecting is not only for the electricity amount, but it is for the electricity facility and not just for the amount. And hence, it should be taxed. That's the view.
Break up the subscription amount and apart from that, actual
electricity. I understood, sir. We do this in practice, but having said that, this is a very highly debated issue and definitely it could get attracted. Yes, madam. I think she was raising the hands for long. Yeah.
If there is no association, like 2-3 flats and the owner is charging some amount as maintenance, will this still be?
2-3 flats only, no? 2-3 flats and the owner is charging amount.
Because he is charging GST on the rental, he is providing commercial
complex.
Yeah.
Okay.
There is no association as such.
But there is a common owner who is collecting money.
Correct.
Definitely taxable.
For maintenance charges, I mean this
That is only for resident welfare association. What you are talking about is commercial complex, right? So it's straight away taxable.
No exemption.
No exemption.
And for GST taxability, you need to have a profitability component. That is not
pecuniary interest is not required. Huh?
Reimbursement of expenditure.
Sir, that's what. In which case, you have to be an agent. Means the invoices and all should be directly in the name of your end flats. You are collecting actual amount and giving back to the supplier. Then you can take that view. Otherwise not possible. There should be bills.
For the auditors.
Sir? Oh, it's asking for the auditors, is it? Oh, for the auditors you're asking reimbursements. Okay, so this was the issue which was under service tax, and there was a very huge decision given to the Supreme Court which said that reimbursements will not be taxable. But that was given under service tax law, and that is also for the period prior to 2014. Because they said there is no power given in the service tax law to tax it. In 2014 they amended the service tax law and they specifically said reimbursements will be forming part of the consideration and it has to be taxed. So same thing continues in GST also. So it will be taxable. Yeah.
Out of city, out of Chennai, drainage and water connection you have to get, means you have to pay 30,000 per flat to the association.
Drainage and
water connection.
Yeah.
They will approach the CMWSSB for the connection.
Correct, sir, but the water connection drainage will be directly in the name of the owner only. So in which case it will be treated as a pure agent. Yeah, directly connection and all, there is no benefit for the association there. What he is talking about is a common electricity and diesel. That is what we are questioning it. Right, so this is about electricity charges. The next one is about ROC fees paid to the MCA. Would it be liable for GST? See, I'm talking about all these prospective issues because these are all some of the issues which have been discussed with the enforcement officials. They discussed it with us when we had some interactions on for the training purposes. These are all some of the issues raised by them also. So these are all the next prospective scrutiny questions that is going to come. That's why I'm just discussing all these things here. Also to make things clear, because from 2016 April there was a big change in the service tax law, which they said any services by the government to a business person, the business person has to pay tax on the same under reverse charge, subject to various exemptions they gave. Okay. Now the question is, in that they gave one circular. They said whether it is provided under the authority of law or not doesn't matter. Is the point they told. Okay. So the question that came up was whether an ROC fee is paid to the Ministry of not just ROC. For the example, banks, they give money to the government for accessing Aadhaar card information. Okay. Now, same way, banks, they vehicle information they get from the ROC by supplying. I mean, they have to pay some 500 rupees per information. So they get lot of information access from the government for which they pay money. 2G, 3G license is a popular example for which service tax is there. Now the question is whether ROC fee is paid, should we pay GST for the same? Is it a supply? Is that government providing supply in this case?
It's a kind of service also.
Is it a business? Because you have to touch upon all the conditions. Only if it is satisfied it becomes a supply. Is it a business?
Yes, sir. This definition includes government provision.
That is person definition. Whether the activity of ROC is a business or not. Incidental to our businesses. Whether it is incidental, is it a business for the government? Because when you are looking at the definition of business, you have to look at the definition from the supplier angle, not from the recipient angle. Okay. So, is that a business activity? So, there is a definition of business. In that, if you can see one point, it says that business activity undertaken by central government and state government or any local authority as public authority, like that one definition is there. And of course in the definition of supply they would have given exemption. If they are providing in the status of a public authority, it is excluded from supply, like that in supply definition they have told. So in this context there was an exemption, that list is there, exemption list is there. In that they talked about lot of points. They said birth certificate, death certificate and all is not is exempt. If your passport fees is exempt. Why birth certificate, death certificate for a business person? I mean that has been exempt. And then they have given exemption for any registration done under any law is exempt. They have mentioned specifically registration done under any law is exempt. So which means what they are trying to say, even all the activities mentioned under the law also could get, this will be challenged of course in the courts, but as such you could see that registrations done under the law is also treated as a business only. They have given a specific exemption in that notification. So there is a lot of exemptions they have given. They said up to 5,000 rupees per service if you are receiving, it is exempt. So if your ROC fees is not exceeding 5,000 rupees per filing, then it could be. Let's say you are increasing the authorized capital and you are paying 15,000 for the same. It is more than 5,000 and it is not for registration under the law. So it could get attracted under the definition of the reverse, and that comes under reverse charge mechanism, where the recipient is liable to pay GST for the same, which is a business. So you may have to look at all the government interactions, license fees paid to the government also has to be looked into, because this license fees is an issue where already in service tax is an issue. For example, these telephone companies has got licenses where they paid for 2G, 3G, etc. On all of them, service tax has been paid. Few telecom companies have not paid, against which show cause notice has been issued. Few companies have paid, and some matters are pending before the court. So all these license fees paid to the government, all the registrations, all the other statutory levies or anything which is paid to the government could attract GST if it is more than 5,000 rupees per service, and also if it is not related to registration, etc. There is a specific list of exemptions they have given. So you may have to see the assessee's expenditure side and look at what are all the government side payments they are making. This is another issue which will come up. And remember that it's an RCM. You have to pay and take credit. Fine. What if you are not eligible to take credit because your output is exempted? First point. What if department identified that you have not paid? If department identified and they issue a notice that you have suppressed this information and hence they are asking you to pay, you are not eligible to take the credit. Section 73 and 74 and 129 says if you have been issued a notice and pursuant to that tax has been paid, credit is disallowed. So this is another point which has to be looked into. Some of these banks pay to access Aadhaar card. As I told you, this is covered under the definition. It has to be liable for GST. Guarantee fees paid to government by the PSUs. They not only government stand as a guarantee for all these public sector enterprises. That also attracts GST because the service provided by the government. Okay, next point. This is another issue, penalty for non-performance. Simple example we'll take, bike showroom. There is you have booked a bike by giving an advance of 5,000. After 2 months you decided I don't like this bike, you went for another bike. Now that fellow will say 5,000 you have given is gone, I will not give it back. So he will cancel it, cancellation charge is 5,000. Will that attract GST?
Penalty.
So it will be treated as a supply.
The penalty is not in the nature of supply, right? So for example, I am filing the GST return.
No, I am not talking about that penalty. I am talking about penalty for non-performance of a contract. It's called liquidated damages in the technical words. So that will attract GST because it is a tolerating an act. I tolerate your non-performance and for which it has been paid. That will attract GST for the same. So all the liquidated damages will attract, of course subject to some exemptions to the government. Next.
But as I asked, the general penalty will not attract GST, right?
Yeah, general penalty has been given exemption.
So excuse me, we have got a favorable order in fact.
Oh, is it?
Yes, for liquidated damages, where it says that the execution of a contract is only, the contract is entered only for execution purpose, not for the breach of contract. So, because of intolerance only, I am deducting the act says toleration. Because of my intolerance only, I am deducting this liquidated damages.
That is because, okay, but whether your contract specifically talks about in case of non-performance, so it speaks about it, but the decision as this is decision at the court level or the appellate level, so where it has been decided that it is for intolerating your act of non-performance and hence it will not be treated. It's a very valid point, but I will take that point. Maybe it's a useful point for all of us also. So what she says is she has got a favorable order at the tribunal level, commissioner appeal level. Okay, this is for which period? Like after 2012 or before 2012? Before 2012. Okay, so after 2012 only. Okay, because that we wanted to be clear. Because after 2012 only this clause was introduced. So the non-performance fee which has been paid is for intolerating an act. I could not tolerate your act, so I am charging you money from for the penalty, and it is not for tolerating your act, and hence it is not liable for service tax. So this is the view. Maybe you can share us the for our reference will be quite useful for most of the cases. It's a valid point. But as it stands, normally liquidated damages has been held by the government to be taxable. But it is a nice point to add. Yes, thank you.
CGT MSA fees paid by borrowers.
What fees?
CGT loan we are getting without collateral.
Yeah.
But that on insurance amount is being paid.
Okay.
It is subject to GST.
Insurance will be subject to GST.
But the bankers are not giving any GST.
The insurance will be directly given by the insurance company. Bankers act only as an agent.
Bankers say it is a CGT MSA fee.
Can you give me the full form of that?
Central government guarantee they are giving.
Maybe unless there is any specific exemption list has been given for that, it will become taxable. Maybe it could be under exemption. We'll have to check the exemption list to know that point. We'll have to refer the notification and see. Okay. Right. Next, drawings by the partners for personal use. Like the owner uses the office space for personal use, or any drawings made. Drawings I don't think normally happens, but in case if drawings is made by way of goods from the business, would that be taxable?
ITC should be reversed.
It is not in the course of business. Which is not in the course of business? Okay, now I'm asking about who is, you're talking about from whose angle? From the owner angle or from the business angle? Owner angle. So if I take the goods out of the business, what is the implication of it? What I should do? I have to reverse input tax credit. Okay, fine. So fine, that's fairly simple because it is meant for personal use. That's it. However, if ITC is not reversed, okay, then department will take a stand. You have to pay GST on the same because it's deemed as a supply. Because in Schedule 2, one of the clauses, Schedule 2 talks about what are all treated as supply of goods or supply of service. One of the clauses says that any goods which are directed for personal use by the owner of the business is deemed as supply of service. So you may have to, in case the ITC is not reversed, this issue would come into picture. In all those cases, wherever you are buying a product and giving it free, you have to reverse ITC. If ITC is not reversed, then naturally it will be deemed as a supply and GST would get attracted on the same. Because department will naturally take a stand, it will be deemed as a supply. Not the stand, you have to reverse ITC. Because reversal of ITC will be for a lower value and supply will be for a higher value. Yes.
Partners remuneration will be taxable.
Yeah. So partners remuneration, would that be taxed or not? So we have taken a view not taxable because it's only an appropriation of profits. But again, it is highly been discussed. Even service tax, this issue is there. As of now, there is no full-fledged judgments. If somebody has any judgments, maybe you can share.
There's a clarification issued by department that is not taxable.
That's not taxable. So,
Director's remuneration.
yeah.
Taking remuneration for more than one company.
Okay.
First company it's exempt. Next company you have to pay GST.
Why?
As service tax they are paying. As service tax you used to pay.
Maybe he's a part-time director in one company and whole-time director in another company.
Whole-time director is in both companies. 20 in other company.
Okay. Whole-time director in both the companies. Should I pay service tax? You are paying service tax. Why are you paying service tax?
Because he cannot pay.
Whole-time director in two companies.
He's exempted for one company only. So then next company they are asked to pay service tax on that.
Not required. So long as in the whole-time employment of companies, it's not required.
He can be an employment for one company only. He cannot be whole-time director
அப்படி இல்லையே.
two companies. That's what they service tax they have.
Sir, அவங்க என்னன்னு சொல்லுவாங்க சார். நீங்க வந்து you have to take it forward the case, that's it. So you can be in employment in two companies. Morning I am in one employment, evening I can be in another employment. So employment means what? You are at the directions of contract of employment should be there. I think there is two words, no? Contract for, contract of. So so long your employment contract says this is your timing, you can be in employment in that timing. So you can be employing two companies also. So that nobody denies that. So I think you can take forward that case.
Full time means what?
Whole time only they said. Whole time not necessarily whole time means morning to night. It can be 3 hours, 4 hours also. Whatever I define is what is the time. Okay. So I don't think that should be the reasoning for paying service tax in the other company. No.
Coming to free supply of goods.
Yeah.
How can we construe that free supply would be treated as non-business?
Free supply?
Business activity only. Buy 2 shirts, I will give you one. That one is free
Yeah.
on the face of actually no business is being carried out to give away the free supplies. So how do you?
Sir, every supply is independent. Okay. Now, if you are looking at your transaction in such a way, let's say two shirt cost is 1,000, one is free. This is one way of marketing. Another way of marketing is all the three, normally three together 1,500, but I am giving in three at 1,000 rupees. It means technically these are, I mean, in terms of overall understanding, you are getting 3 and you are getting 3,000 rupees. But if you get into the contractual points, here you are giving 3 goods sold at 1,000 rupees. Another cases you are giving 2 goods sold, another one becomes a free supply. So in which case the ITC point says that if you are doing any goods, if you see the definition of reversal of ITC, they never said anything, any supply which is given free. What they said is any goods which are lost or given by way of gift, ITC has to be reversed. So they didn't even link it to the word supply. They linked it only to the word goods. And hence, if you are giving anything goods free, then it could be liable for reversal of input tax credit. Now, yeah.
Any authority on this? Any judicial pronouncement?
For saying reversal of ITC. Reversal of ITC.
I am not personally convinced with this logic because any businessman will not do it for charity.
Sir, that is a fact. For example, the fact that you have included the cost of the free supply in the pricing of the chargeable supply will not be a valid ground for you to claim the benefit, because there are so many decisions on this in the excise law, because the valuation of this has come from the excise law.
Sir, valuation rules comes when it is a related part. Otherwise, the consideration need not be adequate as per one of
Yeah,
our rights.
correct.
So instead I can do it in such a way that 3 shirts 1,500, less discount.
You can do that, sir. That's what I am saying. That's what I am also saying. It's only the changing of your...
I want the logic in this. Because
why you want to give free?
Come across this.
Sorry?
Every now and then we come across this, and people are asking, and we are also, as you said, CS will talk both. We are also talking.
Sir, what we have told is, instead of giving anything free, give a price discount rather than giving a quantity discount. That's what has been. Sorry? Yeah. Now, I'll tell you one more impact on this. There was an issue under excise law, I think most of the people will be aware of. Maruti Suzuki case was there, Fiat India case was there, where they said, if I am selling at a price less than the market price, or less than the, not market, less than at the penetrating price, if I sell, then they said there is an additional consideration involved. What is additional consideration involved? You will get more customers. Hence, you have to pay GST, excise duty on the cost plus margin on the transaction value only. Now, why that trigger happened? Because of one clause in the excise law which said price is not the sole consideration. This was there under the excise law. Now, in GST also, you have 2 conditions. You are talking about related party only. There is one more condition is there, which is price is not the sole consideration. So, even now also, the courts could take a view. It is quite possible that if you are selling it at a very, very less price, they may trigger that point, that price is not the sole consideration, referring that old case law. After to control the damage of the old case law, they made a lot of changes in the excise rules. Now, the same issue will again start triggering up. To answer your question, the same old case law could again be applied here also, because the objective of you giving free is not that you have included in the price. Another objective could be you wanted to have more customers.
So whenever the new customers come, I bill them, I pay tax.
Yeah.
What should I pay now?
Yeah. So what they are saying, how are you able to attract those customers? By having the price at a very, very less price. This itself, the fact that you are earning one extra customer itself becomes a consideration for this supply, and hence you have to pay GST. Sir?
When I receive only, it becomes.
Yeah. So as such, that's what. This is an issue which has been largely identified. So what we have advised is, instead of giving one free, let us bill all the 3 together at a lesser price. That has been the order of the day. But of course, some people still continue to give free. One buy, one free. Whatever they give free, input tax credit has been reversed. That's the rule, and hence it has been followed. Your issue is, it is not treated as free itself, but that has not been considered well as of now in the excise law. Okay, so drawings would attract ITC reversal. So this is also another point. Activities treated as supply. In fact, few points here. They said the fourth point is import of services by a taxable person from related party. This is where we have to be more relevant in case of a foreign company. A foreign company is doing access, they are giving their software access to the Indian company and it has not been charged. Will this attract GST? Foreign holding company gives access to the Indian company for their software, the global software. There will be something called cost sharing agreement, which most of the foreign companies will enter. If the cost sharing agreement is very comprehensive, it covers all the services, no problem. It will be treated as import of service. You pay GST and take credit. The cost sharing agreement itself is not there. It will be deemed as a supply and GST has to be paid for the same. So this is one main thing is about this related party rule, where all the issues will start coming up, even right from the small businessman onwards. Right? So the related party, I am not getting too deeper into the definitions and all. So here some of the other issues in the related party transactions. Okay.
Sir, can you throw more information on the previous one? Just said foreign company giving access to the...
Yeah, foreign company making access to their global software to the Indian company. Basically is normally they will incur cost at the foreign company as a whole, and they will do cost sharing to all their group companies. If that is done, no problem. Whatever cost sharing is done, on that GST has to be paid and you can take credit. The cost then it will attract the deemed supply provisions. Import of services from related persons could get attracted, in which case on the notional amount GST has to be paid and then you can take credit.
Sir, one of the global major buyer in USA, they are providing their software free of cost to the supplier in India. We are laying on that and doing the managing the production, supply and everything. But we are using their software managed by IBM, synchronized. In that case, is it taxable? We are doing that. But so far,
I actually want to ask. Because my company also does the same thing. My company access.
Maybe both of you are having same clients.
I don't know.
Okay.
My company also access the IBM software.
Okay, but does it belong to the group company?
No, IBM is not my company.
No,
but
that
my
is
friend
that.
client is at IBM. So my employees are accessing their software, renders the services of the software.
No, we are not looking
Their
at.
platform.
Yeah, that is okay.
No, we are their vendor.
Yeah, so you are not coming under
in
related.
USA, but we are using their software for all the planning the.
You don't have to.
production,
You are not liable.
Pardon me?
You are not liable. Okay. Coming to the most innovative parts of GST. So we are looking at mixed supply, composite supply. There are some new words which has been introduced. It was there under service tax and now it has been copied into the GST scenario. It's about mixed supply, composite supply and independent supply. One of the most often issues which will be facing now, most of the cases will come revolving around this, is about these points. We tried to take some advantages out of the other laws of GST like Australia and Canada. So there are some precedents also. This, whenever we have doubts, we have to refer the cases of those particular decisions. Maybe same words are there, so we can take the advantage out of that. So like vouchers, everywhere already precedents are there under the other countries' GST laws. Okay, now coming to this point about mixed supply and composite supply. Composite supply is very simple, so I will not go too deeper into the definition. I just indicate the broad point. It says 2 or more taxable supply, goods, services naturally bundled. Mixed supply means 2 or more supply. So the difference between composite and mixed, first point is 2 or more taxable supply, there it is only 2 or more supply. So that's the first difference we are having. Second is naturally bundled, here they are independent supply, means they are not naturally bundled and there has to be a single price for the same. So what is the advantage and all, everybody is aware. Mixed supply means highest price, highest rate GST will be charged. Composite supply means you will be charged GST on the main supply, whatever will be the important supply in that, on that you have to charge. This is a general understanding. If both of these are not there, then it becomes independent supply, they are separately billable. Now coming to the examples, situations. This is a very often simple example to look at, very simple example. You go to a service center and you are given your bike for service, okay, and incidentally that fellow replaces spare parts also. Spare parts of all the bikes are chargeable at 28%, whereas service is taxable at 18%. Which GST should I be charged? Let's say I am getting separately one bill for spare parts. So there can be two situations. Separate bill for spare parts and service, consolidated bill for spare parts and service. Sometimes oil and all will be there. They will not separately, but they will include it in the labor charges itself. How will you classify this activity? It's a very simple example, but this is where all the confusions have started. Okay. Now, what will be the nature of this supply?
Naturally bundled.
They are naturally bundled. Means what rate will you charge? 28% is spare parts, 18% is service. Major part is service. Sir, if you see the bill, your major part will be only the, let's say you give for car, motor car. Your major value will be only for the spare parts. But service value will be very minor amount, 2,000 etc. Spare parts will be 5,000, 6,000. Okay, now most of you would have got your vehicle service definitely in the last 1 year, at least once. So how they have charged in their bills? They are charging separately. For a car, spare parts 28%, for labor 18%. That is to avoid litigation, unnecessary problem, etc. But if you are, let's say, on the ground of judicial authority, you are going to decide on this, what is the conclusion you will take? Will you treat this as a composite supply or will you treat this as an independent? They are billing it as an independent supply. Is it a composite supply or independent supply?
Composite.
It's a composite supply. How many of you think it's a composite supply? Because if majority are people. Okay, fine. Because we'll have to see how it is, because this is an issue which will come up now. Now, if it is a composite supply, then what is the major supply in this? Is it spare parts or service? Huh? Service. But value-wise, spare parts value will be high. Yeah. So value doesn't matter. It is only the nature without which the other thing cannot exist. So is service category. So which means what is the GST rate you are supposed to charge? 18% for the entire amount or only the spare part? I mean, the entire amount. So technically this can become a composite supply also. But of course, to avoid any litigations, people are dividing it into spare parts separately and this separately.
No, in this case itself,
Yeah.
there could be a different permutation combination possible. Like one is based on function, second based on the quantity, third would be based on the value, and fourth would be based on the...
That's what, the definition is not based on all these four parameters. The definition says it will be classified based on the principal supply. And what is principal supply? Without which the other supplies cannot exist. Okay, now you went to the shop, there are two things possible. You gave your bike and then he serviced it, incidentally he replaced the spare parts. One option. Another option, he went to the bike shop itself to buy spare parts. Another option. If you went to the bike shop to buy spare parts, incidentally say, sir, there's some hole, I'll do that also. Then it becomes supply of spare parts. In case if you are going there to give for service, incidentally he finds out and says all these mistakes are there. We'll rectify everything together. Then what you are providing as a major supply becomes service. So this is an issue. If maybe one of your client can take the risk, okay, so they can take the risk saying that they put 18% for all the service together. Then we'll go for litigation and then we will go for further appeals. That's what will happen. To avoid this issue, they are billing it separately. Now the next question is, just because they billed separately, will it become two separate supply? The next issue. See, I billed it separately. Doesn't mean it's a two separate supply. Invoice, it's not the other way around. For every supply there has to be an invoice. It's not that every invoice will be treated as a separate supply. So not the other way around. So technically, even if they bill it separately, it can still be considered as a composite supply. It is quite possible to treat it as a composite supply. In which case the principal supply will have to take the base, in which case 18%. But of course, there are high chances of litigation on this issue. As I told, maybe you can ask your client to form one small entity where they do maybe some 20-30 lakhs billing, or they can do 5 lakhs billing, and in that they can charge 18%. Inform the department they are charging only 18%. Ask them to issue notice, then you can go for appeals. So that is to create a case law that can be done. But otherwise, this is one issue which will be definitely triggered.
Yeah. In the same way, the composite billing.
Yeah.
The travel agency.
Yeah.
They are facing the same problem. 5% for the composite bill, otherwise 18%.
18%, yeah.
So it will end up in litigation.
Sir, that 5%, 18% has been clarified in the notification itself. When you are aggregating all the services together and providing 5%. Otherwise 18%. That has been clarified in the notification. But here this is based on the nature of activity.
Freight charges will be part of composite.
Freight charges included in the value of supply itself. Yes, it's also a composite supply.
There are 4 items with different GST rates.
Yes, you have to apportion which freight charges for which product. Otherwise, better to link it to the highest. Okay. So, goods transportation with
In bike repair, it told us, sir.
Sorry?
In bike repair,
Yeah.
I know a particular bulb is not working well.
Yes.
I will ask the person to replace the bulb. So in this case, the primary is only the material.
Yeah, that's what I said.
Second only service.
If it depends upon how you are giving your requirement. Okay. But largely, if you are giving it for if it is a service center, their objective is what? Primarily to take care of the service. And incidentally, they supply the spare parts also.
And they will ask me and only supply.
Only option is there.
Yeah.
They will ask me whether to replace the spare parts. If I say yes, it's a sale of spare parts is happening.
Okay, so your point is that it can be treated as an independent supply. But the thing is, in case if it's a regular service which is being done, they are replacing 4 or 5 items, 5 6 items standard. They replace oil, they replace the clutch, etc., etc. These are standard things. In which case, we can still treat it as a composite supply. But as I said, this can be up for litigation, but it's a good case in hand.
Can I look at from another perspective that under section 11, explanation to 11, that is exemption notifications only, but that explanation clearly says that the party shall not charge tax in excess of the rate mentioned. So assuming that...
no, that is, I'll tell you for what purpose it is. You should not charge, this was there under central excise law also. What they said was, you are not supposed to charge a tax. If you carefully read it will say, if it is wholly exempted from tax, you are not supposed to charge tax on the same. Why? Because you may have input tax credit. So, it may be exempted supply. Earlier what used to happen was in excise, the goods were exempted completely. But people charged it and they collected from the customer. Customer took credit. These fellows had large accumulation of credit, so they used it against this the exempted excise duty paid on the exempted goods. Then the notification in section 5 subsection 1a, they introduced one clause where they said exempted goods should not be subject to excise duty. It's a continuation of this point. So what they are saying is here, you should not charge GST on an exempted supply, and you cannot treat that as a taxable supply by paying GST on the same and then take input credit. People were misusing that earlier. To block that only they mentioned that particular provision in this regard. So maybe that is mainly for exempted supply only for exempted supply.
Sometimes exempted supply need not be 100% exempt. It may be 18 to 5, for example, restaurant that 18
we'll take
to
that
5.
At the end.
Yeah, sure.
I'll finish it off. Otherwise, our path there. Right. So next one is goods transportation with insurance and loading. The essential nature of service becomes transportation activity, and hence the entire tax will be at 5%. Supply of maintenance parts with the machinery. Machinery has been the major supply. You supply the parts along with that. Then it could become a composite supply in this regard. Okay, this is another issue which this industry will be facing. Is clearing forwarding services. The clearing agents, what they do is they will clear the goods from the place of import, and they will do logistics, and they will reach the logistics means transportation. They will bill clearing services so much, freight services so much, like that they will bill all the components. Clearing services is normally taxable at 18%, and freight services is taxable at 12% if it is billed by the supplier, 5% if it is paid under reverse charge. Now the question is, the freight charges which they are collecting along with clearing services, will it be a composite supply or independent supply? This is an issue across this industry. So if you are looking at this industry, you will have at least 10-15 clients, just like that they will line up.
But right then actually give reimbursement and actual invoices.
Correct, but if you see, nobody will have an actual reimbursement. There will always be a markup in this industry of some 100 rupees, 200 rupees. So they don't normally get the bill from the transporter directly in the name of the ultimate customer. They will get it only in their name and they will in turn raise an invoice. Now we have advised some of our clients to change that. Form one more entity and then raise invoice on that. Then in turn raise an invoice to the end customer. But still, otherwise it is with margin only. Okay. So how will it be treated? Will it be treated as a whole? This is an issue in this entire industry, because what is the essential nature of the service is you are supposed to do the clearing forwarding. That's the major activity. Objective is not to do transport and then incidentally do clearing forwarding. The major thing first is clearing forwarding, and then you also do the transport and reach it to me. So in which case, unless the contracts are independently determined with independent prices, this could land up in composite supply, where the major activity becomes clearing forwarding. So their views are there. So this is about, again, independently the prices have to be determined in this regard. Supply of notebook and pen with separate pricing, these are all will be considered as independent supplies only. Okay, so these are all some common points.
Otherwise in the case, freight services, suppose if I ask the C&F agent to charge a 12%.
Suppose?
12%.
So can you ask the C&F agent to charge 12% on which amount?
GTA.
Only on the GTA. Treating that as a independent supply. That's what. Unless otherwise your contracts are negotiated separately. If a responsibility is import and delivery at my location, then entire thing could become a single supply from essential nature being C&F. If your contract is independently negotiated with separate pricing, separate negotiations, separate mails, then you may stand a chance to keep it separate.
Again, when he makes a payment to the transporter, he is liable to pay under reverse charge.
Yes. And he'll take credit. He'll take credit.
He can take the credit.
Yeah. Okay. Right. So this is about the mixed supply, composite supply parts. Of course, the combo packs and all has become an issue. Now, before going further, one last question on this. Almost at the end we are now. One question is, all these tech parts have been charging rental charges from their customers. Along with that, they will also recover electricity charges and other maintenance charges will be collected. Electricity and water, as again regularly. The question is, this electricity, they will have a license actually to give electricity to their tech parks, because normally they get a license under the Tamil Nadu Electricity Act. So electricity is normally supplied by TNEB etc. is exempted supply. Water as unprocessed water could become exempted. The issue is, if you are supplying one taxable, another one is exempt. Taxable supply and exempt supply are supplied together, what will happen? Let's say water is exempted, renting is taxable. So taxable supply and exempted supply are supplied together. What will be the nature of supply? This was an issue which was identified in the government circular itself. In the healthcare services, what they said, canteen services provided to the patients is a composite supply, because it is part of the healthcare service. Okay. So healthcare service is an exempted supply. Canteen services on a standalone basis is a taxable supply. On a standalone basis, leave alone hospital, on a standalone basis it is taxable. But if these are supplied together, it may be having single pricing or different pricing, doesn't matter. But it will be treated as a composite supply. So the question is, can an exempt supply and a taxable supply be supplied together as a composite supply? Is a question. Because if you see the definition of composite supply, it says one or more, two or more taxable supplies is the word they used. Actually, I am also in the process of learning. So this is something which keeps evolving as I keep seeing every month. There are some improvements in that wording itself. So taxable supply. So now the question is, can it be treated as taxable supply? You understand my question? So if I am supplying exempted and taxable together, can it become a composite supply? Because composite supply says two or more taxable supplies. Okay, so
in the act it says only two or more supplies, not taxable supplies.
You must be seeing it for mixed supply.
Composite supply part.
Composite supply only, two or more supplies only.
Two or more taxable supplies only.
Just seeing in
You are seeing section 8. Go to the definitions.
Go to the definition of composite supply. Right. Right. So, right now in this case, Actually, when I was also of the impression that okay, this cannot come under composite supply because one is taxable, one is exempt. But however, if you see the definition of taxable supply, it says supply of goods or services which are leviable to GST. It never says which are liable, which are subject to GST. Leviable only. They said there should be a levy. Whether payment has to be done or not is not required. There should be a levy. All exempt supplies are subject to GST. They are only exempted from payment. We have lot of Supreme Court decisions in earlier excise law. I think every CS student would have studied Wazir Sultan Tobacco Limited versus CC. So that was a very famous case law which was talking about levy versus collection. And whereas floor bills, few case laws were there in excise. So technically every exempt supply is also a taxable supply only, just that it has been exempt from payment. So in which case even an exempt supply and taxable supply can together form a composite supply also. So this is one of the views which is quite possible in case of healthcare. So wherever you are having exempt and composite taxable together, you may have to look at are they naturally bundled or not. Simple. So
the rate will be principles.
Sorry?
Then the rate will be the
principle. Let's say education. Education services is a recent circular from the government also. The hostels, the schools are boarding schools, they are giving hostels to the students at a price. Would it be taxable or exempt? Hostel provided by the school to the students, they are charging monthly so much, they are correct. Will that be taxable or exempt? Will that be
Predominant supply is education.
Predominant supply is education.
Before plus 2, then it is totally.
Sorry, up to plus 2 it is exempted. I think I said plus 2 already. After plus 2, they should not be in the boarding school. Okay.
So there is an exemption notification. Any service provided by school to its children is exempted. Any service.
Okay.
So hostel is one of the service to their children.
Okay. So here the circular also has been given. The circular has been given on another parameter. They said it is exempt, but not because it is a service provided by the school to the children, but because it is considered as a residential accommodation, and hence per day that any you have to know the limit per less than 1,000 rupees per day. The charges are less than 1,000 rupees per day. They said it has been exempted. But however, if it is a boarding school, providing education and lodging is normally considered as a composite supply. And in which case, if you are providing the accommodation along with the education, then it will be treated as a composite supply, and hence you are still eligible for exemption because the major supply happens to be education. So, and of course, as he pointed out, the definition says only services by education institution to the students is the wording used in the law. But having said that, we can go in 3 different manner and then say it has been exempt from GST. So boarding schools can get exemption on all the segments because of this particular issue. So time is okay. So I think what I covered is morely related to the supply definition and composite supply. There are a lot of issues on valuation. I'll just touch upon 2 issues and close it. So 2 issues and then I'll close it on valuation because they have regular implication. I'll not take beyond 2 minutes to conclude in this regard. Okay, so one is related to the credit notes part of it. Okay, so I think in valuation there are 2 conditions. One condition is that related parties should not be there. Price is the sole consideration. Fine. If you are giving discount in the invoice itself, you are giving discount, no problem. You can reduce the balance amount, you pay GST. If you are giving discount after supply, we call that as post supply discounts. Okay. What they are saying is, like for example, what do they call, turnover discount or group discounts they may give.
Cash discount.
Cash discount itself is there. So you can give a credit note subsequently. Okay. And this post supply discounts also can be reduced from the value of supply. How we can reduce from the value of supply? Because you are not giving that at the time of invoice. So you are giving it separately only. So at the time of giving post supply discount, you have to give a credit note with the GST. If you do that, automatically in your GST returns, this credit note will be reduced from your value, and hence indirectly your GST also will be reduced. So any post supply discount can be given by way of a credit note with GST, provided it is subject to 3 conditions. One condition is it should be linked to the specific invoices. It should be established at the time of agreement. That means at the time of supply itself, it should be established, and it should be known at the time of supply. That is, both the people should be aware that it should be there. Now remember, in practical terms, most of the discounts offers are all suddenly offered. Most of the FMCG companies say today the Pepsi is not going well. They say, okay, give special discount for Pepsi. The supply would have happened already to the recipient. Then only the discount offers may get announced. In which case, the credit note cannot be given with GST because the discount was not established at the time of supply. So this is one major issue which would come up now at the time of assessments also, that nowadays any credit note with GST cannot be given. Unless otherwise credit note is one for reduction in price is possible. There is a reduction in price post supply, or because of discounts if it is given, provided it has been established. So it means what? There has to be, every time when the supply is done in the invoice, there has to be some protection clause to say that there will be a discount that could be given at future. But actually they say it should be established. And what is called established is not defined. Whether it should be in terms of percentage, amount, or the scheme should be there or not is not available. At least some scheme should be there. Okay. Now the next issue is, so what? Anyway credit note not given with GST, so what's the problem? Because anyway the recipient would have taken full ITC on the original invoice. What is the problem on it? Is the next question that will arise. And that is where ITC rule coming into picture. And ITC rule says you have to pay the invoice amount in full if you want to take ITC. Within how many days you have to pay? 180 days. Now if the credit note is given post the supply, you will not pay to the extent of that credit note for this particular invoice. In which case that 180 days condition within which the payment has to be done may not be satisfied. So the ITC may have to get reversed at the end of the recipient also to the extent of credit note for which GST has not been passed on. So this could be one of the major issues. Assessments will start happening where if the credit note was not given with GST, then the recipient to the extent of the payment not done by him may get attracted for reversal of input tax credit. Okay, so this may have to be looked into maybe at the time of your verification or annual returns. There is one point which could become quite relevant. So it's better that every credit note comes with the GST and the terms are already established initially itself. So this is one just point just wanted to clarify here. So with this,
the post supply credit
yeah.
note.
Yeah.
Okay, we have to establish, can we have a general
clause
saying that there will be program cost in the event of a recession or such and such event? Can we have such a clause?
That's what. So as of now we are protecting ourselves through such general clause only, or by way of a general circular saying that there is a circular given to all the distributors saying that there will be a discount which will be given on so and so date or in the event of so and so event between this percentage to this percentage. Okay, mentioning the range which will happen. So that is only to protect in the later point in time, because the department is also not clear on these issues. So all this is what we will protect it. So this is one thing which all the FMCG companies may have to look into when they are going for assessments. Right. So with this I will conclude my discussion. So we have broadly covered on the valuation front and on the supply front and composites and mixed supply. So too much information is not normally good for health. Okay, so we will conclude at this stage. So thank you for your patient listening. Thank you.
Well began is half done. So Honorable Session 3 hours, I think you all enjoyed the minute aspects of the GST. Please join your hands to thank Mr. T.S. for sharing his knowledge. It was so minute and very specific. He shared his experience in addition to sharing. And one particular member has to give a summary. I wanted to call members from the last. The afternoon session, anybody sitting at the last row will be called. Now, Mr. Vedaraman, yes, 242378 will give the summary now. Thank you.
Hello, good afternoon, all. I am Vedaraman, partner Rajan Kumar Chagar Accountants, head office in Chennai, and we have a branch at Mayiladuthurai. The last second session was a great thought-provoking session. I would like to sum up some of the points which was covered by Mr. T.R. Srinivasan. The point relating to that amount recovered for food, which was covered in the first session, and second session it was relating to motor car. And by structuring the employment agreements in such a way that we can get avoid of the tax for that transaction. Tax planning. Whatever. And next, with regard to the sale of exercise and car, and what is the benefit of taking the credit at the time of purchase? If you are not taking the credit, what is the benefit of reducing the depreciation value, and in what value we have to pay GST, whether it's a transaction value or the difference between the transaction value minus the WDV with the surplus that was given in the sale of exercise. And with regard to joint development agreement, one of the important point is that whether the landlord has to be registered under GST to pay, and the recent notification came in January. He mentioned whether he has to register himself at the time of supply, and that was the important issue we have to homework. And with regard to composite supply, I am not taking much of time. And with regard to composite supply, the two taxable supply, that's the difference he has made. And the taxable supply, exempt supply also can be combined with another taxable supply, because exempt supply is leviable, but the tax rate is exempted by way of notification or in the act. So with this I am concluding the sum of it in a brief. Thank you, Honorable.
It was like a mini trailer. Oh, thank you, Vedaraman. May I now request a very senior member from Kochi, Mr. Nair, on the dais please, to honor our speaker on behalf of each and every one of us present here. Mr. Nair, please. And before that, a line of reflections. Your reflection, and then please honor the speaker.
Hi, my colleagues. I am very much privileged to be in front of all of you and giving this opportunity. And I decided to attend this course. Thank you so much for this opportunity. Second, Mr. Srinivasan presented the matter like we are as if we are all clients. So we got the real feeling of that. So we can accordingly take the same approach to our clients also. And if any further clarifications, sir, definitely we will be approaching you. So that's it. And I hope we all enjoy. We learned, and every moment is a learning process. So that way we are thankful to you. Thank you so much.
So let's break for lunch, and the afternoon session will be much more enthralling because the topic is very wide, and the speaker is a very, very powerful speaker with innumerable years of experience. So let's wait for Mr. Parthasarathy's session. Different seats. Please change your seats and get yourself introduced to your neighbors. And not the same set you have to go. Okay, if you are in a round table, please spread across to go to a different. 3 minutes you have to go to 3 different locations.
Senior people.
The purpose is please get acquainted with your fellow professionals. And there will be one special prize which we will be announcing on the 4th day. 4th day on the last session, because before Mr. Vaidiswaran gives this session, we may invite at random or voluntarily any one member. You have to come here and you have to identify each of your friend's name. Okay, because we are 78 here. We are 78, and it's a record break actually. I must say, maybe a half a day program or a 1 day program and all, we have crossed these numbers. But as a advanced course, as a course which is very designed program by the ICI, we have not seen this much number. And the last number was 72, which was a certificate course. Now before we have our speaker, he has already reached before he, Mr. Sampath Kumar Escortson. May I request two of you to come forward and give your introduction, and most important, please share your very unique experience as a chartered accountant in your profession, which you want to share, you want to inspire, you want to tell your professional fraternity, yes, this is one challenge I have faced, and I have overcome this because of either institute or because of my qualification or because of my experience or because of my mentors, because of my principal. Maybe we can start with CA Rupa Ramachandran. Yes, madam. Partner of Narayanan and Company. We'll start with Madam Rupa Ramachandran. She was a participant of certificate course on indirect taxes and very down-to-earth person, and she moves very comfortably with fellow professionals. Friends, please join your hands welcoming CA Rupa Ramachandran, and it was the right time also we have our afternoon speaker, Mr. Parthasarathi, also here. So, both, just few minutes.
Please come. Please come.
Good afternoon, everybody. I think my stopgap arrangement is fulfilled now. That is. So my name is Rupa Ramachandran. I'm a partner in V. Narayan Company, practicing for about 20 years now. Basically, I deal in direct taxes, and of course, what was inspiring and what was motivating and what helped me is attending this institute course on service tax when it was introduced. I think it was a great initiative, to overcome the mental block and get started. Mr. Purushothaman, my guru, is sitting there. My mental guru is sitting there. So he was also instrumental. He was, I think, took the first session on service tax rules. I still remember. And going forward, GST, the advanced course, the basic course on GST also helped. I think it's a great way for us to attend these seminars, because where you don't get an opportunity to look at various areas, either you learn by doing it or learning from somebody else's experience, which I think is a great learning initiative. Thank you.
Thank you, madam. May I now request CA Parthiban, G. Parthiban from Madurai, past chairman of Madurai branch of SARC, to formally introduce C.R. Parthasarathi.
Happy afternoon, friends. I think Mr. Gopal Krishna Raju has taken a lot of ice-breaking efforts to keep us all awake. And I think he has also announced some rewards as a part of keeping us all awake. But friends, we have with us an eminent faculty, Parthasarathi, who is very capable of keeping us engaged, not awake, for the oncoming 3 hours. A teaser about Parthasarathi has already been released by Sampath, and which was endorsed by Mr. Raju, and now I am here to just furthermore vouchsafe for that. Mr. Parthasarathi heads the tax practice of Chennai and Hyderabad areas. He is an expert of excise, customs, service tax and GST, foreign trade policy, anti-dumping and whatnot. And he is an expert on classifications based on the HSN. He is also involved in litigation in patent, excise, service tax, customs, VAT and income tax matters. He is also responsible for patent procurement, patent acquisition and patent enforcement. In addition, Parthasarathi actively involved in WTO trade remedy and customs valuation. Before entering the private practice, Mr. Parthasarathi was with the Government of India and held various positions such as Deputy Secretary and Director, Ministry of Commerce, Director, Railway Board and Accountant General, Tamil Nadu. He had also audited the accounts of UN headquarters and had been an UNDP consultant. And his qualifications are now the law degree from University of Delhi and master's degree in business administration from University of Hull, United Kingdom, degree in physics from the University of Madras, fellow of the Institute of Cost and Management Accountant of India, and is an associate of Institute of Company Secretaries of India, and he is an advocate on record, Supreme Court of India, and he has been with the firm of Lakshmi Kumar and Sridharan since 1996. He thus brings with him more than 40 years of experience, of which about 18 years at the higher administrative level. Ladies and gentlemen, I have great pleasure in presenting to you the learned speaker, Mr. Parthasarathi.
So before Mr. Parthasarathi takes over the mic, before the tea break, we will have a photo session here. So may I request all of you to not to go for the tea. After the photo session, we will go together for a tea session. Thank you very much.
You start with the tea or no?
Let it start. Good afternoon to all of you.
Good afternoon.
The reaction when you say good afternoon itself makes me happy. Otherwise, 2 o'clock is a very, very dangerous session, and also for 3 hours. And the person who introduced us clearly saying that there is an award and reward for keeping awake, and then also keeping engaged. So that was what I can't go to sleep because I'm going to speak. So the whole problem is with the audience only. So I was immediately reminded of one very interesting shloka of Panchatantra of Vishnu Sharma. It says, Yauvanam Dhanasampattihi Prabhutvam Avivivekita Ekekamapi Anarthaya Kimu Yatra Chatushtayam. Please pardon me if I am using Sanskrit instead of Tamil. I had no issues to be made. Just came to my mind. Yauvanam, being young. Dhanasampattihi, having money. Prabhutvam, belonging to the ruling class. Avivivekita, a person who neither knows himself nor will he listen to another person. He is an avivekita. Ekekamapi anarthaya. Out of these 4, even if one is there, there will be a problem. What to say if all 4 are together is the sloka. Because this is talking about reforming a prince who has all these 4 abilities, and in the Panchatantra, that particular prince is reformed through the process. Therefore, I am saying you have afternoon, extraordinarily very good lunch, on top of that a difficult subject like HSN, etc. So you take all of them together to keep yourself awake is a great challenge to me, I should say. But generally, all of you are also used to this type of setups. So I'll definitely try to keep it interactive. Maybe it all depends on how much experience you have on this particular subject. So we'll keep that up. But what I'm going to do is going to deal with a lot of examples. I'm not going to deal only pure theory or the interpretation, but I'm going to talk about a lot of examples to show how deep is this particular subject. To give you an example, in India, most of us are multitasking. You agree, no? All of us, we try to do all the jobs. They ask me when I go abroad, how can you do, sir, patent and also taxation? We never know that these two could merge. Because if they say taxation, income tax. Within income tax, it is only international transaction. Within that, this particular thing, specialization is so much, some people have spent 25, 20 years in 2 sections probably of the Income Tax Act, not anywhere else. That is the type of thing people do. And in my experience, I had conducted this classification classes for 3 days for HP, Hewlett Packard people. I'm talking about 18, 20, 17 years back when I did that. And there are 2 people in HP who had worked for 25 years only in classification. Hewlett Packard, manufactures laptops, computers and their peripherals. They fall only in 2 chapters called 84 and 85 of the customs tariff. Their 25 years is only on 84 or 85. You ask them anything on 86, I don't know, sir. You ask them anything on 83, I don't know, sir. So that is the amount of spend. That means in chapter 84 and 85, only with computers, printers, large format printers, UPS, on all these things alone, somebody could spend 25 years and he still had doubts. That just to tell you an example, therefore, when we are going to deal today with classification, spread out about all commodities under the sun have to be classified somewhere. So we are talking about a subject which is not that easy. That's the first thing. But at the same time, it's a really interesting subject. And that is what I wanted to share. The whole purpose of it is definitely not to make you expert at the end of the 3 years, is simply not possible. But to give you an insight or a taste into what this exciting field is about. That's really what the whole objective of that. If at the end of the day you feel, yes, I got something out of it, I think my objective would have been achieved. I'll start with an example. You all know washing machines. You all have washing machines. The washing machine has a motor, right? So your washing machine is faulty. The person comes and says the motor has to be changed. Okay, you buy a motor. Will you classify that motor as a part of the washing machine or as a motor separately? And this is a motor exclusively designed only for a washing machine, and that too only for an IFB washing machine of that product, because everything has to fit in a specific place. You can't put it into a Videocon machine what is fit for IFB, even though they may all be electric motors. So you have a machine, a motor of that nature, 100% suitable for use only with washing machine. You cannot use it for pumping water in your house, so it's not a motor of that type or pump of that type. How will you classify? Any general guesses you wanted to make? Because we are not concerned at all with the correctness, and it is just to slowly introduce you into the subject that I am talking with that example. Why should it not be a part of washing machine? It can be. But electric motor is also separately classified under the HSN. 8501 covers electric motors. So you have washing machines, and under washing machine chapter 84 you also have parts of washing machines. That's also heading available. So you have parts of washing machine, there it will also fit. It is an electric motor by itself, it will also fit 8501. Because if everything can be straight away classified, there is no requirement for any of us. No, all of us have some economic value. Therefore, there has to be. That means there are some methods by which you resolve this type of dispute. How to classify parts. There are rules prescribed for that. For that, I wanted to, what is the answer for that? We are going to do in depth. We are going to do 10 to 12 examples also we are going to do today. The most important thing which I want to understand is how many of you know about HSN, the Harmonized System Nomenclature, based on which our customs tariff is there, which is now followed in the GST in its entirety. That's what we are going to follow in GST. That's why the connection is GST says go to HSN, to the customs tariff. Customs tariff is based on HSN, and therefore I just want to know how many of you have heard about the Harmonized System Nomenclature or HSN. Some people have heard about it. You have worked about it, you know a little more of that HSN, how it came about, how it came into existence, etc. Because one of the most scientific commodity classification systems is the HSN. Even today, there is a HSN committee, classification committee, under the World Customs Organizations in Brussels, which meets every May and every November, in which all the 160 and odd member countries are represented, because nothing is static. Today you have new and new products which are coming into existence. Earlier you only had a printer, I had no problem in classifying it. I had a scanner, I had no problem in classifying it. I had a fax machine, I had no problem in classification. Then suddenly you got multifunction machine, it can print, it can scan, it can also fax, everything it can be done. So you got a multifunction machine. So how do you classify multifunction machines? So nothing is static, therefore this committee continues to get what are new products which are being developed, how those products should be classified. For that purpose is a rectification or a change in the HSN classification necessary, and then they issue every 6 months new notifications or clarifications as to how a particular product should be classified or what are the things to be there, what are the new things which are being brought in. So all these things are continuously developing, and it is one of the most scientific systems. As chartered accountants, you all of course do a lot of VAT work, right? When you come to Tamil Nadu VAT, if you want to look into some schedules, how to do any classification, can I go alphabetically, can I go schedule? You can't. If you don't know the subject, you have to go through all the schedules, all the descriptions to understand where a product will come. There is no way you can do. But today, if I say I am talking about an electronic thing, there is a chapters 1 to 98 in the customs tariff. But I really don't bother. 85 is electrical and electronic machinery. Something related is 84 is other types of machinery. 90 is some optical instrument. So I might have to narrow down my classification to 1 or 2 or 3 chapters instead of going through the entire thing. So it is one of the most scientifically designed classification systems. And how many of you know that if I know the commodity classification by HSN, I will be able to do the work for all the 160 countries. I do classification worldwide for some countries. Sitting here in Chennai, worldwide the entire product, what should be the classification, whether it is Korea, whether it is here or whether it is Mongolia, all the classifications I do it from here because it is a common HSN. We are going to talk about the digit, 6-digit classification is common whether I go to the United States or here. 8th digit, 10th digit, etc. are specialized for your country, the way you want to collect the statistics, 8 and 10. But up to 6 digits, the classification is almost uniform throughout the world except some few people who don't want to become members of the World Customs Organization. Everybody else follows this particular system. Therefore, one advantage is if you know this commodity classification, you will be able to do it in any part of the world. So if somebody suddenly asks me in the United States, what is the classification of this item, I of course have access to the US tariff, but I don't even require any US tariff. Up to 6 digit I can do based on HSN. Only when I say what is the 8th digit classification, what is the 10th digit classification of this particular item, I need to go to the particular tariff. So it's a very scientific and a very interesting way it has been organized. And how many of you know that HSN, that this committee is also bringing about a book called HSN Explanatory Notes. The entire tariff and something called an explanatory notes they bring about. Because most of the time, just by reading the entry, you may not be able to decide. But you will get a lot more insight when you read the explanatory notes as to what is intended to be covered, what is intended to be not covered. Everything is split out in the explanatory notes. It's something like, today if I buy that book, it costs about 2 lakhs to me. But it's like 4 volumes without which I cannot live. It will always be on my table for every item of classification. Some things may be straightforward, but why would anybody come to me for straightforward? I am the last resort in classification which cannot be resolved at all. That is the type of thing. Therefore, I require HSN, I require various rulings in different parts of the world on a classification of the items, etc. But despite all that, because of the commonality and the scientific basis of it, the way you could narrow it down and the way you could approach the classification is far more uniformized throughout the world. That is the great advantage of this particular system. Whereas when I do VAT, whatever I did in Tamil Nadu is not going to help me in Maharashtra. I have to go through the schedules there, I have to go through the same thing there, because each one is organized in a different way, the way they write it, etc. And the great advantage of the GST is finally they said we are also going to follow the HSN. Therefore, to a large extent when it comes to classification, you have to be very careful. Now coming back to this example, if motor is 18%, but part of washing machine is 28%, classification becomes very critical, correct? Department 28, our client wants 18, and that's also there is no problem at all. Resolving that is the most difficult thing. Clients always want the lower, department always wants the higher, that also there is no dispute. Where will you go? This is one situation. Assume it is 18, both. Whether it is part of washing machine is also 18, motor is also 18. So, it doesn't make any difference. I say part of washing machine, he will say motor. And tomorrow morning a notification comes, motor is 18, parts of washing machine is 28. Then I want to change it. The moment I change and do something, you did it intentionally with intention to evade payment of duty, show cause notice, penalty, everything is possible. So even when the rates are same and classification does not make a difference, you still have to be careful about the classification so that if there is a change later on, if you move to that, there is always a likelihood of being accused of planning it in order to evade taxes. So this is the type of thing which comes. Therefore, today we have a situation where the classification disputes are far less than when I started my career in 96 or 2000. The amount of classification disputes I've argued in tribunals up to the Supreme Court is numerous because the rates of duty will be 48%, 50%, 70%, 75%, etc. Today everything is 5, 7.5 and 10, something like that as far as the customs is concerned, and here also we have only 5 different rates. Most of them they come within the range you may not have. So classification disputes are reduced because the rates, the spread amongst the rates of duty has reduced significantly. But still, every day, if you are, whoever is doing GST is you are talking about it, you will have disc pads for brake. Is it a part of motor vehicle, 28%, or is it disc pad 6813, 18%, 28? Uttarakhand Advance Ruling Authority yesterday has given, it is forming part of parts of motor vehicles will be taxed at 28%. Our Rane brake linings continues to argue with me, sir, it is 18%, it will never be 28. I said, no, it is 28%. You read the HSN, what will come under 6813 and what will be excluded out of 6813. What you manufacture will definitely not come within 6813, it will go only to 8708 as part of motor vehicles. So it becomes advanced ruling. What I am saying is, even today the disputes have started, but like most countries, people are going for advanced ruling and trying to get a fast ruling so that at least you know what is the position and you can plan your business, because businesses cannot wait for 2 years, 5 years, 6 years for rulings to come. So now they get. But the problem is, even if it is correct or wrong, sometimes because of the rate of tax, they may decide that this is how it should be done. Therefore, I think even when you are suggesting, for example, to a client to go for an advance ruling, we must have all the arsenal within us to say why what we say is right and try to get an advance ruling from the authority for that. Otherwise, you may land up with a rate which is higher. Now, this is the broad introduction I wanted you to see what is the importance of this particular subject. That's really why I thought I would start off with that. Now, what we will do is, because it is a scientifically based classification system, there are also scientifically based rules as to how you determine a particular classification. So, what and how you go about determining the classifications, what are the principles, and for each one of them, what are the examples, and from the example, what further we can learn. I think that's really what we are going to talk about for the next 2.5 hours. One thing is, this is a professional body, right? Because it is a professional body, please ensure that you don't have to wait at the end for any questions or anything like that. If you feel that somewhere when I am stating something you are not clear, you are welcome to stop me. My flow will not stop. Automatically after answering a question, I will get back to that, not a problem. So that is also, keep that in mind. Don't have to wait till the end. Why I am saying this again, cultures are different. I go to Japan. In Japan, the only way to do is, if you have a presentation, you should go exactly according to the presentation, you cannot deviate it from there, etc. And whatever falls from my mouth, they will keep it as if it is pearls of wisdom, and everything will be noted down. And at the end of the session, 2.5 hours, then only questions will come. After the questions are come and the session is over, people will stand in queue and then only exchange cards. So cultures are different, each one has a different culture. But I am saying, because from India we know, you can stop me at any time for your questions or any doubts. If I am able to clarify, I will clarify. Otherwise, I will say I will look into it and let you know. Okay. So, any questions up to this point? I haven't started except the first line. Because one of the things we always say is, what is the value of a lecture? The value of a lecture is how much you are able to recall tomorrow morning at the breakfast table when you are talking with your wife or husband, as the case may be. How much you are able to recall, that is what? 97% you will not be able to recall. That is what said. Therefore, it's very important that when you communicate, it's not only talking, it is also with reference to slides. That's one of the reasons why you had. You had some question? As of now, GST, sorry, I am not able to hear any microphones.
There are only 5 rates in GST as of now.
Correct.
So, this classification, if at all it comes in different classification, and there is no dispute between the rates.
Correct.
Suppose it comes in 18 and 18.
Correct. It may not matter, but as I said, if at a later point one of them change, you may have a difficulty in changing, then we say, why did you classify earlier? I will give you a classic example. But it is not under GST, it is in the customs. Today it is happening. I think in one of those sessions also I said. Sony regularly imports liquid crystal display for manufacturing TV sets. All are LED or LCD only today. So you are importing that in order to manufacture TVs. Television sets fall under a tariff called 8528, reception apparatus for television. I am going to show that. 8529 says parts and accessories of goods falling under 8525 to 8528, which means tell. There is also an entry called 9013, liquid crystal devices, not more specifically described in any other heading. 9013, liquid crystal display devices, not more specifically described in any other heading. So you have got one, this LCD, if you talk about this LCD or LED, it is definitely a part of the television set, just like washing machine we saw. If you say that it is a part of what, and say 8529 says parts of 8528 are covered, it is part, so. But it is a liquid crystal device, but is it more specifically described anywhere? It is not more specifically, it is simply stated part of various items, but it is not. But this is the LCD, it is complete in itself, it will be 9013. Sony classified under 8529. 8529, 9013 were same rate of duty through a notification. 4 months back they amended it, and by then they increased the rate to on 8529 but retained the rate as same for 9013. So Sony classified under 9013. notices you issued saying you have done all this only because now the rate of you have done this. But we say 8529 is wrong, 9013 is the correct one. This is what the Supreme Court has said in secure meters. We have got the liquid crystal devices which are in your electricity meters in your house. You read the machines, no? You have the numbers come, how much is the power, how much is the voltage, how much is the ampere, what is the unit reading, all of that. That is also a liquid crystal device only. Today all of the electronic meters only, you don't have mechanical meters. So that case went to Supreme Court, and Supreme Court after reading this etc. said 1913 is specific. You cannot call it as part of electricity meters. Electricity meters is one heading, part of electricity meters is one. But these are liquid crystal devices. They are not more specifically described. A part is a general description, not a specific description. Therefore 1913 will apply. Therefore based on that we say 1913 is what I will also come. When I import the LCD or LED display, it will not be part. But department says no, you have done the entire thing only because lower rate of duty has come. That is the dispute presently going on. Therefore, sometimes even the customs at the time also never bothered. I asked the customs, you are there 30 years, you are supposed to be an expert on classification. You did not object when I did 8529 saying it is wrong, it should be 1913. Because the rates of duty you also kept quiet, I also kept quiet. But when it made a difference, I am trying to find out what was the correct classification and I am trying to put it, how can you accuse me? So the dispute keeps going on. Therefore, the only I said, even if the rates are same, it is probably very important to determine the correct classification. Maybe if all of them become one rate, we probably don't have any problem, but that will never happen. There has to be a lower rate and higher rate. One rate is almost impossible in any country for that matter. So to that extent, the disputes may come down, but disputes will still be there. So that's why I'm saying today it is 1818, maybe you can also give, but when it comes, if a change comes, you may still have a problem. You don't have to read any of this. It's just to give you an idea, what are the GST tariff schedule? I am starting how GST is now going to be linked with the HSL. That's what I am trying to bring in. Now this is the first rate notification, 1 of 2017. On the left hand side is for the integrated GST, and the right hand side is for the central GST. All that I am pointing out is, as you rightly said, there are 6 schedules under which various goods are being classified and the tax is going to be different. 5, 18, 28, 0.1, 3, 0.25, whatever they 5, 12, 18, etc. So this is what is the class. This is what, as of now, it said goods falling under Schedule 1 means 5%. Goods falling under Schedule 2, 12%, 3, 18%, 4, 28%, they are given. Therefore, where your goods fall in the schedule is an important thing. So this was the starting point in the GST. Because they have said Schedule 1, 2, 3, 4, when you go to a schedule, this is how the GST tariff schedule looks like. Again, the big one is not, I just extracted the GST schedule and I have highlighted a portion on the top with red called the chapter, heading, subheading, tariff item. These are the 4 important terms which you will have to know for classification purposes. Therefore, that's the starting point. So there is something called a chapter, there is something called a heading, there is something called a subheading, and there is something further called as a tariff item. So depending on all this, so what they have indicated is 8422, 8423, 8424, like that. They have indicated something. We will come to all of that. So what is important is there is a GST tariff which prescribes different rates of duty for goods falling under different schedules, and the schedules look something like this, where you have heading, subheading, tariff item and the chapter heading. That is what has been given. Then at the end of the schedule there is an explanation, and this explanation which I have highlighted is important. A tariff item, a subheading or a heading or a chapter shall mean respectively the tariff item, subheading, heading and chapter as specified in the first schedule to the Customs Tariff Act 1975. Therefore, what they say is, whenever in GST I refer to something as a heading, subheading, what I mean is what you find in the customs tariff. And because our entire customs tariff is based on the HSN system, we will have to study the customs tariff also, And wherever we don't get any indication from the customs tariff, we will have to go to the HSN. There are cases where neither HSN, even HSN may not be able to give you a correct classification. Then of course you use your experience and classify a particular commodity and go ahead with the process if there is a fight, etc. Then it's not simply possible like what we saw, LCD panel, or is it a part of thing, motor or part of washing machine, how to classify. Therefore there are also rules for the interpretation of the customs tariff. That is the second one. That is the fourth, Roman 4 here. The rules for the interpretation of the first schedule to the Customs Tariff Act, including the section and chapter notes and general explanatory notes of the first schedule shall, so far as may, apply for the interpretation of this notification. Therefore, what you are doing, you have a GST schedule. In the GST schedule, it follows the classification which is followed in the customs tariff. In the customs tariff, these words are defined, those meanings will apply. And in addition, in the customs tariff, there are various rules as to how to interpret a particular entry and arrive at a classification. All those principles would also apply. That is all that they have been stated. Therefore, the entire GST, unlike, because we did not have something like this in VAT only, even though there is a description, we are not able to use the HSN and tell them, because of this, what you say is right, wrong, what I am saying is right. Only very recently, when it comes to the information technology products, most of the VAT schedules started giving the item and then said as per HSN or as per the central excise tariff, etc. they started giving. But now with GST, we are going to be fully harmonized with the customs tariff, which itself is harmonized with the HSN. Therefore, we are going to have a lot of uniformity in the manner of classification. So this is what are these items, what is the meaning of this, what are these rules for the interpretation, and how these will be applied is what we are going to see in the remaining portion of the session. At least I am looking around completely, I am not finding anyone asleep, so I am happy about that. I am certainly, because it's also not easy to ask questions unless you are also involved in some way. If it is totally new subjects, very difficult to ask, but till you get into some basics. Thereafter, of course, you will always have doubts. Now, therefore, first what we are going to do is, they say the general rules for the interpretation of the customs tariff shall, as far as may be, apply to the interpretation of the schedule of the GST is what we saw. So, what are those rules for the general rules for the interpretation of the customs tariff? Now, for that you have to know what is the structure of this customs tariff. And this is where I said when HSN has a very scientific basis. All goods under the sun are divided into 21 sections. Each section has a number of chapters. Totally there are 98 chapters. In fact, in the HSN there are only 96 chapters. 97, 98 are kept for individual countries. We have chapter 98 called project imports. If some of you are used to, chapter 98 is called project imports. When I am importing 120 different items for a project, instead of classifying each one of the 120 items under different tariffs, different taxes, government says classify them under a heading called 9801 project imports and pay one tax on all of them without having to do the 120 classification, which is very useful when you are doing setting up a power project. You will have tens of thousands of items being imported. So you can't keep classifying everything. You say I want to go under project import, okay, they register and then you go under 980. So there is a specific chapter to India. 97, 98 will be specifically kept. Chapters 1 to 96 are common across the world. So they have given you the freedom for those 2 chapters for each country to play with, that's all. That's why in our country we have 98 chapters. Under each chapter you are segregated into headings. The headings are further subdivided into subheadings and the subheadings are further subdivided into tariff items. I am going to give you an example of all that. This is a top-down approach. When you talk, and this, I said scientific. If you look at the tariff, chapter 1 will start with live animals, horses. Therefore, you will talk with the basic form of life, live animals, plants. Then you will talk about meat and meat products. From the animals, you get meat products. From vegetables, you get vegetable products, vegetable items. So, the tariff will also be progressing from the lowest form to the highest form. And once you have exhausted the plants and the life, it will all start with industrial products. And industrial products will go on from chapter 28 onwards, various chemical products, and go up to chapter 96, miscellaneous products, etc. So it will go. And the other scientific way is, in each chapter, the arrangement is, it will always start from the lowest form of the product and proceed to the highest form of the product. Chapter 39, plastics and articles thereof, that is a chapter 39. 3901 will be primary forms of plastic. Chapter 40, rubber and rubber products. Chapter 40 will be natural rubber. But when you go to 4022, it will be a totally different rubber type of a product. 4018, tread rubber for making retreading of tires, it will go to that heading. Similarly, for 3926, articles of plastic, etc. Tableware, kitchenware made of plastic. So the progression within each chapter will also be from the lowest form of that particular product to the highest manufactured finished product of that. That is how the tariff will produce. So from each chapter 1 to chapter 28 also it will proceed. Within each chapter also it will proceed in that particular manner. So therefore, that is why I called it as a much more of a scientific basis and system in which it has to be done. Therefore, 21 sections, 98 chapters, and then within the chapters you have headings, and within the headings, subheadings, and tariff. Below that will be the tariff item.
So one question.
Yeah.
See for goods, from 1 to 98, it's about goods actually, and we can take the interpretation based on this rules, whatever you're going to discuss. But what about SAC, where if we have a confusion, how do we take the interpretation?
You are talking about classification of services. This is completely about goods only. This is completely about goods. Just as we have this scientific system, UN has developed a classification system which is the SAC which you are talking. There is a UN classification system. But within the UN classification system also, we have problems like this. For example, you have design services, you will have engineering services. What about engineering design? Whether you go into design or you have problem even within that. But today we have not got into that much of a tariff classification with reference to service as is done for the purpose of goods. So service it is still being done in that fashion, but whether a particular service, because the description will be 18% or 28%, we probably are not having that type of problem today. But at some point, then, in every economy as we progress, we always move from manufacturing to service, and then higher technology oriented what. So service orientation, to the extent that because we always had a single service tax regime also, classification was not important. Classification to the extent before the negative list started, it was important because if you don't fall within the definition, you say I am out of the service tax net. Once the negative list came, so long as you are not in the negative list, you are to pay. Whether you are in A or B or C, I am not bothered. Like we are indifferent to the classification. That is the type of system presently prevalent. But you don't have, there is still a very scientific classification system for services also developed in the United Nations, but it is not being applied uniformly in many of the countries. But now we are also started, and that classification is the basis for all negotiations in the WTO today on general agreement on trade in services. There is general agreement on trade in goods, there is the general agreement on trade in services. When you have whether lawyers from here can work there, whether lawyers can move freely over here, this is a trade in services. For that, those classifications are now coming in, and then they are identifying, okay, these are all the classifications which are restricted. These are all the classifications where there should be a free movement of people between one country to another. They are trying to do that. Therefore, the classification will become probably more important in service in the days to come, but today it is not deserving the importance that it actually deserves. I don't know where it comes. I have an extra this thing here. Where from it came. Okay. I'll go because I had also given, for example, chapter 85. I had one slide. I don't know whether it is listed here or why, or it cannot have loaded the whole thing because it was only a new thing. Chapter 85, for example, it is under section 16. So you have a section 16, under which there are two chapters called 84 and 85. Therefore, chapter 85, electrical and electronic equipments, that's the heading for 85. Within 85, for example, you will say 8528. will be heading. 4 digit is what we call as a heading, 8528. Monitors, not involving a reception apparatus for television, whether or not incorporating an FM radio, etc. That is what will be the heading, 8528. Then you will say 852872 color televisions. That is what we call as a subheading. 6 digit means subheading. 85, 28, 72, 10 color television set not having a screen diagonal more than 36 centimeters. You have 36 or like that, you have 6 or 8 tariff items going beyond 100 centimeters, etc., depending on the size of the screen. So this is what you have done. Therefore, chapter 85 covers all electrical electronic products. 8528, for example, reception apparatus for television. 852870 will cover black and white. 71 will cover color television. And within color television, the moment you get 8 digits, up to 36, 36 to 50, 50 to 73, like whatever are the things, they have a classification based on the screen sizes. These 8 digits is our own making. For whatever reasons we want to collect the classification or trade statistics, so we have designed. And we had this 8-digit classification only introduced on the 1st of August 2003. Till then we had also only 6 digits. Thereafter we developed this because we wanted to have a finer classification of the goods. Therefore we have developed the 8-digit classification on the 1st of August 2003. So this is what, whenever I talk about section, chapter, heading, subheading and tariff item, there will be guidelines for you to say how you should do under heading. There could be rules to say how you should do under subheading. You may be able to get how to do it under a tariff item. You will have different rules as to how you will fit a particular product into one of those places. Now the first rule of interpretation, this is the first rule of interpretation. There are only 6 rules of interpretation. I am not going to do all the 6 of them, I am going to do 4 of them only. Those are most important, 5, 6, etc. rarely used, but these are important. And like any example, the first one is what will determine 90% of the classification will be determined based on rule number 1, which talks about classification shall be determined according to the terms of the headings and any relative section or chapter notes, and provided such headings or notes do not otherwise require according to the following provision. 2, 3, 4 will come only if you can cross 1. The first thing they say, I start with the ... and then put a classification. Something more is there in rule 1. All that it says is the headings which are given in various sections or chapters are only indicative. For legal purposes, classification shall be determined according to the terms of the respective heading and the relevant section notes or chapter notes, and if all these things do not require, then proceed to other rules. So this is what we call. Therefore what? When I say 8528 reception apparatus for television, you go according to that description. That is the first most important thing. 85 electrical and electronic equipment and machinery, that is only indicative. That is absolutely nothing to do with that. 8528 becomes the heading, is important. When I say 8529 parts of goods falling under 8528, then I have to see, are there any section notes, are there any relevant chapter notes which say how a particular part should be classified. Then I should look into that also. That is how the whole thing will go. If all of them don't require, then I should go to other rules. You take for example, you have a motor car. Chapter 87 covers various types of vehicles and 8703 is passenger motor vehicles, not a problem. Suppose there is a motor vehicle which does not have an engine, or it does not have the battery, or it does not have the tire. How will you classify it? If I follow rule 1, or if there is a heading which says cars which are incomplete,